Hello and welcome to our UAN year-end training. My name is Alex Komorowski, and I'll be joined today by fellow presenters Lauren Henthorn and Robert Walter, and we're happy to present your year-end training for 2025. We'll go through the agenda here. So we have our overview now. We'll go through some recent updates and what's new, and then we'll be following the best practices. Again, you can get that on the website, UAN link, under training document. Some of the things we're going to go through will be the what's new for the software update at year end, doing the install, opening temporary mode, walking you through your budgets and closing out the year, and then the things you're going to do to start 2026 once you get into there for year-end balance certificate, etc. Today we're going to have some trivia during the presentation. It was a pretty good hit last year with the Ohio theme, so we're sticking with Ohio-based trivia today. And we'll begin with our first trivia. Ohio has some amazing art barns, and they're all around the state, and they celebrate famous Ohioans and other interesting works of art. So it's a good time to use the Q&A section in the chat. If you could throw out, if you think you know where the Annie Oakley Art Barn is located. We'll also be using the Q&A today. If you have questions, send those over. We'll put them in a queue, and then when we have the question slide pop up, we'll go through those too. So does anybody know where the Annie Oakley Art Barn is located? And we'll go through that now. It is in the village of Anzania in Darke County. Annie Oakley was a master trick shooter and a star of Buffalo Bill Cody's Wild West show. Ohio native. We have one more piece of trivia. Another art barn, famous Ohioan Rutherford B. Hayes, 19th President of the United States. Does anybody know where his art barn is here? Let's see. And we had some pretty good, yeah, a lot of people in the chat knew where the Annie Oakley Art Barn was, so I'm really happy to see that. Excellent. All right, so the Rutherford B. Hayes Barn, let's see where this is located. Oh, we got some answers. Fremont's coming in, Delaware County's coming in. A lot of Fremont, so we've got some folks out there who are seeing these things. Definitely in Fremont, Sandusky County. And a thing to note about Rutherford B. Hayes was he was a decorated Union general from the Civil War, and he got wounded multiple times during the war before becoming president. Thank you, folks, for the interaction. Again, questions, please hold those. You could send them over, but we'll be holding the answers until the question sections. So feel free to send those in as you get them. We'll collate them, and then once we hit the question slide, that's when we'll review. Some questions we'll share with everyone. Some we're just going to reply back to you, and they're all valid, so send them over. Thank you, folks. So your year-end training materials, again, we talked about going to uanlink.ohioauditor.gov today. Right on that home screen, there's training materials for today's site, and that's going to be the year-end best practices. In general, all your year-end training materials will be under uanlink.ohioauditor.gov. If you hover over training and then you select year-end, you're going to see this presentation once we post it to the site. Currently, if you go there, you're going to see last year's. And that's also where we're going to post the year-end best practices and the year-end full procedures. We also have the pre-year-end training video up there. So lots of good information under the training year-end section. Also, don't worry, you don't have to get the best practices and procedures online. You're going to get that when we release the software for 26.1, which will begin your year-end journey. And we'll go through how to open up the procedures and best practices on your computer once you get that software download, which will be coming out next week sometime. We're hoping for midweek. Once that does come out, we'll send everybody an email letting you know it's out, and we also put it on our webpage that the software has been released. If you get the email and you do the download, you'll have your link in the email with the download instructions. If you don't do the download, you'll get an email saying it's been released and they will mail you a USB drive. Takes longer, so we strongly recommend you go through the download process. But all the year-end materials are going to be on the website, UAN link, under training and the year-end section. You could always go back to this video today, pause sections, review the slideshow. We do get a lot of questions on, can we get a copy of the year-end slideshow that's being presented to us? The short answer is no, and that is because when we do the slideshow, we create it in PowerPoint, and sometimes there's pictures laid over others, and to create like a PDF from that, sometimes on different slides, it's just going to be a jumbled mess because you're not able to tab through those. But the slideshow today is all based on your year-end best practices. That is like a year-end checklist for you, and we highly encourage you go in order, checking those off. We also have the year-end procedures that we refer for year-end in-depth information. So if you're going through your best practices and you need more information, that's when you would go into your year-end procedures. And we don't give out the slideshow, but like I said, we do post this video on the site. So kinda, if you go on the website and pause the video at a section you want, you're gonna see the slides you want. Moving on, I'd just like to point out for new fiscal officers this year, there is the pre-year-end training video on our website under that year-end tab. That's terrific for first-time fiscal officers or anybody. If you're going through year-end or you just want to brush up, it kind of gives you things you want to knock out before you get into the year-end process, just to make it a smooth year-end transition for you. There's going to be, year-end's a bit of a different animal, and you're talking about different things at that time. So there'll be different terminology thrown around, and it's just a good refresher for somebody who hasn't done year-end too often or a brand new fiscal officer. Keeping with that, we had new fiscal officers, new trustees, and everybody could have new employees every year. So we just wanted to throw a reminder out there. If you have a new employee or new trustee, and that person is going to go into OPERS or OP&F, either retirement system, you want to make sure you file your paperwork with them first before you withhold that retirement. You want to confirm all the paperwork is completed with OPERS, for example, before you apply the OPERS withholding to that employee and pay the wage. Because if the paperwork is incomplete and you withhold OPERS, OPERS is going to reject that withholding when you try to pay it, tell you the paperwork's not done. Then you're going to have to do a wage adjustment, possibly 941 changes if they should have been in Social Security instead of OPERS during that, and you might have to do W-2 edits. Another note is once you open year-end and go into temporary mode, you can't do wage adjustments at that point anymore. So if you have any wage adjustments that you've been sitting on during the year, give UAN support a call, and we can walk you through how to do those now before you get into the year-end process and it complicates things for you. So again, new employees, make sure they fill out that OPERS or OP&F paperwork as soon as possible, so that way you can withhold accordingly. On the website for UAN Link, we also have accounting and payroll housekeeping videos. Those are fantastic for things that you might have to brush up on before year end, just really keeping your books clear and making sure you have a smooth transition. So things there are going to be like messy bank rec issues. Do you have any lingering other adjusting factors hanging out there that you have to take care of? Do you have any voided checks or checks that aren't cashed from prior years that are just hanging out on your bank rec? You're going to want to clean all that stuff up before you get to a year end. So if you do your bank rec every month and under payments, you're seeing payments from 23, 24, and prior years hanging out there, before you go through the year end in 2025, you want to void all those and then see if that money needs to be moved to an unclaimed money fund, or you need to cut a new check to that vendor, or you want to just make sure you're dealing with that issue ahead of time. So check out our pre-year end video under training, and you also want to look at our housekeeping videos on the UAN Link site under training and either accounting or payroll. As I said before, the 2026.1 software release is coming out soon, next week. I don't have an exact date for you, so we're hoping for at least mid next week, hopefully not late next week, but keep an eye on that. We're going to send out an email to everybody once it is released. The vast majority of folks are now doing the download. It really doesn't take a lot of data, so you don't need high-speed internet to get it. You don't need, you don't want terrible internet, but as long as you can browse Amazon or watch a Netflix video, you could absolutely download UAN. So if you log into UAN link and you go into the profile login, which is going to be your username will be your 4-digit UAN number, and the password is going to be your 5-digit AOS number found on your billing statement. You log into there, just like how you registered for this year-end conference, you'll see a section for UAN release delivery section. If you click on that, that'll tell you if you're set up for the download or if you have requested to get it in the mail. We're no longer mailing CDs, so we will mail you a USB drive with the software release on it if you need that, but I don't recommend it because we're now in Christmas card season, also package season, and if you've seen how crazy your packages that you order from Amazon get in December, where I got returned light bulbs that I didn't order one year, you know the mail system is overtaxed. So if you could do that software download, you are doing yourself a great benefit because the USBs could get lost in the mail or just severely delayed. So the other thing you could do, if you do the software release, you can download that on a computer that has internet access, and if for some reason your UAN computer doesn't have it, you download it, you put it on a USB drive, and then you could put it on any computer you want. You can put it on multiple computers. So the software download is the best way to go, and you want to make sure under the profile login on UAN link, you have the release delivery selection set for download, not the mail. We have about 90% of the people do it that way now. Okay, so getting into the 26.1 software, to download that, you have to be on 2025.2. If for some reason you're still on 2025.1, first you're going to have to upgrade to 2025.2, and then you'll be able to get on 26.1. So in the bottom right corner, when you're logged into UAN, it will tell you what software version you are on. If you see 2025.1 there, give UAN support a call, and we will email you the link for 2025.2 so you can get upgraded. That's the current version we're on. Come next week, it's going to need to be downloaded for 26.1 once we release it, and that's what's going to allow you to go through the year-end process, open temporary mode, and go from there. Just a reminder, and we'll go over this several times, once you install 2026.1, it will not automatically open temporary mode for you. That's going to have to be a choice that you actually activate. So if you want to download 26.1 when we release it next week, that's okay. You could still work in 2025, and it won't automatically start year end for you. And we'll go over that in more detail later. But for now, the thing you want to take away is open up UAN and confirm your version is in 2025.2 so you're ready for the software release. And one more time, we'll go over the year-end best practices real quick. Where to find that, which is what you're going to be going along today once we get out of this section. For the rest of the video, you're going to want to go to uanlink.ohioauditor.gov. And once you're there on the main site, you'll see a picture of a keyboard, a pad, and paper with someone writing down. And there's going to be a training document link. Right there, you're going to click See Details, and that's going to give you the best practices that we'll be going through today to close out your year. And again, you want to use that as a checklist of your year end. So go in order, cross them off as you go. And if you have deeper questions on that, that's where we want you to really get into the year end procedures, which is well over 100 pages. And that goes in deep dive on detail on every step of that year end best practices. So your year-end documents, once you install 26.1, And this dovetails right into what we were talking about with going on the UAN Link site. Once you install 26.1 on your desktop, you'll have a UAN tools icon. That's your screwdriver and wrench. We often have you go in there to do a splash stop so we can remote in your computer. And that's also the place where you find the UAN training software. So not everybody knows it, but if you open up UAN tools and you double click on version documentation, that gives you the manuals for UAN. So it's going to give you the full accounting manual. It's going to give you the full payroll manual. It goes through all the information there. It gives you an overview of anything that's changed. And at year end, you're going to want that overview. And also you're going to want the best practices and year end procedures that you'll find under the version documentation software link once you download and install 2026.1. And just to touch on this section again, if you haven't ever used it before, if you open UAN tools and you open up the UAN training, that will open up UAN software in training mode, which is probably one of the most powerful tools you have in the training. I know everybody loves our videos, especially the ones where Bob has a cold and he's sniffling. But if you open up the UAN training software, anything, it's like Las Vegas, anything you do in training stays in training. So it will say you're in training mode. It'll say you're in training township. It'll say training mode with yellow exclamation points in the top right. But the neat thing is it pulls in all your current information from UAN. So if you have a payment in batch, it'll show up in batch and training. Your budgets will be accurate. All the dollars will be there. And you could do anything you want in training, and it doesn't impact actual UAN in production. So if you're a new fiscal officer and you want to run a test payroll, open up UAN training and run a payroll and see what happens. Make sure you get through it with no errors. You can then check your reports and see how your appropriations look after running the payroll. If you have to do a fund balance adjustment or an investment transfer or something you just don't do too often, we highly recommend you open up that UAN training. Your login is the same as regular UAN. And as soon as you log in, it says you're in training with a yellow exclamation point in the top right corner. So that way you know that's where you are. And you can do anything you want. It's like a sandbox. So it's a great resource. And we hope everybody uses it to the fullest extent there. Moving on, we've got the year-end best practices. So that's the guide we're going through here today. You want to follow those steps in order, and we don't recommend skipping around on there because they're like building blocks. And when you're closing out the year, you want to make sure you have everything finalized before you run something like your year-end reports, because they're not going to be accurate if they're not complete. So follow along in the year-end best practices today during the presentation, and make sure that you're not skipping around in there. They're laid out in order for you as a checklist. Your year-end procedures, they tie right in with the year-end best practices, and that is the full in-depth instructions for each step on closing out the year. So it gives you the details on everything there, and it comes with a table of contents that makes it much easier for you to go through. As a note this year, e-filing, pretty much the trend is we're moving towards having to e-file everything. I know a few people thought they didn't have enough W-2s or 1099s, so they figured, hey, I'm just going to file paper filing with the federal government last year, and then come sometime in like June, they're told that it's all rejected and they need to e-file anyway. So make sure you're following the federal government and the state and local guidelines for e-filing at year end, and you need to review what those policies are. For W-2s, they get filed federally with Social Security Administration. A lot of people think they go to IRS. It's a little bit of a misconception. W-2s, you're going to file with Social Security, and to do so electronically, you're going to need a BSO number. It's going to be required to file those with the Social Security Administration. So make sure you go on their website if you don't have a BSO number, and you look up how to get one. It does take time, and it's in the pre-year-end video, so hopefully you have the BSO number already. If you don't, well, I wish you the best of luck and hope the government shutdown doesn't slow you down there. 1099s, you're going to want to e-file those as well. Those are what do go to the IRS with your 1095s. And to do that, you need a TCC code with the IRS's FIRE system. Now, around the 1099s, the IRS does get a little confusing with our folks because they have the FIRE system and the IRIS system. I know the IRS has something called IRIS. It's mind-blowing. The FIRE system is what UAN produces the e-file for. So if you have a TCC code, all you're going to have to do for your 1099s is hit the file button in UAN and upload that to the FIRE system with your TCC code. If you have a TCC code for the IRIS system with the IRS, it will allow you to go in and manually enter the 1099 information in there. So UAN is still going to produce 1099s for you, but the UAN e-file is not compatible with the IRIS system. So you're going to get an error message and you're going to have to fill those out manually. Not the end of the world if you have a TCC code, just means a little bit more manual work on your end for the IRIS system. If you want to just take the easy way and have UAN create the e-file, all you do is upload it. You need that TCC code for the FIRE system for 1099s and 1095s. We're going to beat that into your brain a few times today because it's important, and we don't want you to kind of stress out under it. Another note is the FIRE system, when you look that one up, it is going away with the IRS in a couple years. For now, UAN is still using it, and that's the system you want for this year. So don't worry about the IRIS system yet. You can get a TCC code for both. That's great. But the UAN e-file only goes to the FIRE system. The last TCC code you need is if you have to file a 1095 with the IRS, then you need a TCC code for the IRS's AIR system as well, only if you file 1095s. So it's not a very large majority of people who do, but if you are a 1095 filer and you're going to e-file that, then you need a TCC code for the AIR system. The e-filing threshold for the federal government is combined 10 or more W-2s and 1099s. So if you have 5 W-2s and 5 1099s, then you're at the 10 or more, and they want you to e-file that. So just keep that in mind, and the 1095 would also count against you there too. So basically everybody's moving to, they want you to e-file both the federal and state. So you want to get on board with that. So that way you don't mail things and then think you are in compliance and everything's taken care of. And then sometime in late spring or early summer, you get a letter that says, hey, you didn't file these, we're rejecting your paper filing. So please follow all the e-filing guidelines for your year-end documents. Filing electronically, again, with the 1099s, you need that TCC code for the IRS FIRE system. That's where the UAN document e-file is going to be uploaded. The FIRE and IRS TCC codes are not interchangeable. You need one for each. So if you have the FIRE, you could e-file. If you have the IRS, you have to manually type it a little bit more. For more information on that or any of the guidelines, we recommend you go to the IRS website and review that. We've already talked about the two systems, and the FIRE system, you're going to see when you go on there, it's going to be retired. It's set to retire in 2027. So for now, UAN still using the FIRE system. That's what you want to do to upload your e-file, and you'll be all set there. The AIR system, that's the new system they have for the 1095s. If you've never used that before, but you do have to e-file your 1095s, 1094s with them, you want to make sure that you have a TCC code for the IRS AIR system, and you can get that from their website. Reminder, it's only a small number of UAN clients. So you could check your prior years to see if you filed a 1095 through UAN. If you have, great, then you want to do that e-filing with the AIR system. If not, then you're probably not in that small crowd. The threshold for the state of Ohio with the W-2s is now required for everybody. So all employers must file W-2s through Ohio Business Gateway, which has been renamed to Ohio ID. We're going to use those terms interchangeably. So most people still call it the Gateway or Ohio Business Gateway or Ohio ID. So you want to make sure you're set up, especially if you're a new fiscal officer and you have access to that. So you're going to make your tax payments and file your documents. The local tax documents, so your W-2s for local municipalities. Starting in 2024, UAN created an e-file for RETA and CCA. So we made that available last year. Just wanted to do a reminder this year. If you have RETA or CCA, you want to follow their website and guidelines, but UAN does make the e-file for those municipalities. UAN does not make an e-file for any other local government or municipal taxes. Some of them will take the state file or the federal file, but UAN doesn't make a specific one for anyone else, just federal, state, CCA, and RETA. Just a highlight, when you're closing out year end and you have that year end checklist, if you are an OCBOA filer or you filed OCBOA in the past, UAN no longer supports the OCBOA filing, so you won't be able to close year end through UAN as the regulatory filers will. It's a small pool of people who file OCBOA, but we just wanted to throw it out there that last year was it. So this year you can't e-file your year end through UAN with OCBOA. You'd have to register with the Hinkle system and upload those documents to them separately, not through UAN. Only for OCBOA filers, UAN is still going to work just like a clock for all the regulatory filers. A big thing we wanted to touch on this year is the no tax on overtime. As a fiscal officer, everybody's heard about no tax on overtime, the big beautiful bill, no tax on tips, that kind of thing. And as fiscal officer, a lot of your employees are going to look to you with questions on this. So does no tax on overtime actually mean there's no tax on overtime? That's what you want to familiarize yourself with so you can better explain it to your employees. We highly recommend you go to the IRS website and look up the no tax on overtime under the Big Beautiful Bill Act. And we'll give you a brief overview on it today. UAN does not give tax advice, and we would refer you to tax advisor or the IRS for any in-depth tax questions. So we can only tell you what we have, which is the basic. And I'm going to cover overtime as being the 1.5 rate that is typical for overtime. If you're overtime, I know there's police and fire out there, EMS, things like that, people who get, or holiday shifts, things like that, people who get a 2.0 rate or a 2.5 rate on overtime instead of the 1.5. I do not have an update on that. IRS website, I could not find clear information. So we would refer you to the IRS or a tax advisor. But for today's example, we're keeping it to the strict traditional overtime of the time and a half or 1.5. So what does that mean for no tax on overtime? First, you're going to have to tell your employees that no tax on overtime means no federal taxes. There's still going to be Medicare, things like that coming out, but federal taxes wouldn't come out on the overtime. And what does the IRS see as overtime? If I work an hour of overtime, does that mean that whole hour is not taxed? No, it does not. The half portion of the time and a half is what is not taxed. So IRS rules are if you work overtime at a 1.5 rate, the 0.5 is the portion that is not taxed. And we'll have an example here, but basically, if you work an hour of overtime, 66% of that is still going to be taxed like it normally would be, and the rest is considered the overtime bonus, and that is what will not be taxed. So out of the 1.5 overtime compensation, only the 0.5 is the non-taxed section. In math, break it down as an example. If you have an employee who makes $20 an hour, so their overtime rate is $30 an hour, the non-taxable portion of that is going to be the $10 overtime premium. The $20 base rate is still taxable by the IRS because they see that as base pay. So even though it's an hour of overtime worked, if you make $20 an hour and your overtime rate is $30, the $20 base is taxed as normal, no change there, and only that $10 separate is the overtime premium. That will be the tax deduction they could take for federal taxes. This year, the tax deduction, and we'll go over it in detail, the onus is on the employee to claim that tax deduction. So If this employee who makes $20 an hour regular pay and they make $30 an hour of overtime, if they work 10 hours of overtime, that would be $100 that's deductible of overtime every week. Now, if they work 10 hours of overtime at $30 an hour, that would be $300 in total. So again, the 2/3 portion is still taxable as normal, and the 1/3 is not. So the 0.5 is not, and that would mean they'd have $100 that's deductible for overtime for that week. If they work overtime every week at that rate, the deductible overtime over 52 weeks at $100 a week would be $5,200. That's what would be deductible. The max deduction is $12,500 of qualified overtime compensation. That is just the 0.5 of the 1.5, and $25,000 if they file a joint return. So that's a single filer, $12,500. Joint is basically double at $25,000. For the tax year of 2025, the IRS encourages but does not require employers to report qualified overtime compensation in box 14 on the W-2. In UAN, this would be a W-2 edit, and we'll go through how to edit your W-2s later, and we'll have a section where you would put the qualified overtime only in box 14. In our example above, remember, for 1 week, if you're making $30 an hour as overtime and you work 10 hours, they'd have $100 that is qualified compensation to be deducted on their taxes. So if you're not familiar with the rules, highly recommend you go to the IRS website and please go over those, because we know your employees are going to ask a lot of questions about that. And my last reminder for our overview here is the reports purge. So UAN keeps 7 years of rolling data, and we purge your documents after that. So in keeping with your record retention schedule, UAN does not require record retention. That's all on the local government. So whatever your record retention schedule is, you want to make sure you adhere to that. Once you go through temp mode and close out 2025, you'll be losing the year of 2018's documents. You want to print those out. You want to save them to little USB drives, back them up however you need to keep in compliance with your retention schedule. Just remember those USB drives have a little charge in them, so they don't stay good forever. So printer paper is great, but you're going to lose the 2018 documents after you close out the year of 2025. So please back those up however you need to. And that's also every year we listed in our year-end procedures. We don't want you to get taken off guard by that. There's no way to get those back once they're purged off your system. If you have like an old UAN backup from 2020, you think you can install that and then you get 7 years of data back off that. It doesn't work that way. Once you close out 2025, you're going to lose your 2018 records. So please back those up. We'll now move into our questions section here, and let me review those real quick and we'll get you answered. All right, we've got some questions that came in, and Bob Walter is going to go over those questions and answer them for the crowd. Take it away, Bob. Thank you, sir.
All right, can you hear me okay? Yeah, all right, great. So yeah, we had a number of you. I answered your questions individually, but some of them are going to be good for the whole audience. So we'll talk about those. A number of folks asked about the 2026.1 update. I believe Alex mentioned this stuff, but the webinar goes by fast. I get that. So just to repeat, that is expected to be released December 8th, Monday. And so for download, we'll be sending out emails to everyone, whether you get a USB drive or a disk. And we will, if you're going to be downloading it from the website, which is most of our customers, then you'll get an email with instructions on that and a link. And you'll also get through the mail, slower pace, of course. You'll get the there was a trivia. Sorry. Yeah. And so, sorry, the Lauren is Lauren is confusing me. little messages. Um, anyways, so yeah, we'll be getting that out. There's some questions about like, hey, why does it come out in December? It gets to be a busy time. Well, the fact of the matter is, we don't get all of the information from the other government agencies until late November. I mean, if we get it all, for instance, IRS tax tables, that'll be in a later software patch. So it just has to be that way, unfortunately, for us to get you the most up-to-date. It's a large, big project to get that all updated and written into the code. So the time of year, really, the earliest we've ever gotten, since I've been here a long time, is in late November. So it's typically, though, the second week of December. And so that is the reasoning behind it. We got to wait on a lot of the government agencies. And if they get it to us in November, we got to rewrite the code. And that is a time-consuming process for us as well. All right. So let's go through some of these messages here. There's been a lot. I may kick this back in a minute to Alex. There's a lot of questions about the no tax on overtime, but you know, I'll follow up on that. Let's see here. All right, someone asked, do I have a, I don't have a TCC code. Is it too late to get one from the fire system? I do not know how, we do not know that. You have to contact the IRS. In the year-end procedures, both Appendix 2, both even if you want to go check last year's year-end procedures, Appendix 2, it's got a link to the fire system website, and then you can follow their instructions on either registering for that. Some of you said, hey, how do I know what my TCC code is? Again, that's not really a UAN question. We don't retain that in the software. You type that in each year that you use it to create the file. And so that's something you'd have to retain in your own records. All right. Another question we have here is what type of document should retain at year end? I believe that's covered a little bit later in the presentation. That is also in Appendix 2 of the year end procedures, and that hasn't changed from this year or last year as far as what documents retain at end of year. All right, that's another one related to no tax on overtime. A lot of those TCC questions, unfortunately, we can't answer the TCC code questions. Just to reiterate that if it's the fire system, that is a different TCC code, transmittal control code, than say the air system for the 1095 or for the IRIS system if you're using that instead of the one that we provide a file for, which is fire system for 1099s. And the BSO number for the W-2s for Social Security Administration is something you also would have to contact them to get registered for that as well. You don't have to re-register every year for those. If you've got one, you can continue to use it on the same system, but they're not transferable from one system to another. All right. All right, give me a moment just to page through some of these questions. Okay, someone works at two different government entities and they're wondering if they can use the same TCC code for their 1099s at both. I don't believe that is the case. I think it's entity specific, and you don't have to keep getting a new one for the entity, even if there's a different case, maybe a change of fiscal officers. And the W-2s, it's not, also the same question about W-2s. If you work at two different entities, that would be the BSO number for Social Security Administration, not a transmitter control code. All right. Okay, if a township has less than 10 1099s, can I still mail it? Well, we go over in both the overview of the year-end procedures. I'm sorry, the overview of the version update that you're going to get next week. All of the different forms that UEN produces that count towards those 10. So you have to add up your 1099 NEC, 1099 MISC, any W-2s. So if you have payroll, so if you total all those up, the threshold is actually 10 or more of all those different information returns, and in the 1095 for a few people who have that. And there may be some other quote unquote information forms that UEN does not produce. There's plenty that you have to do that we don't produce in some cases, and those might count as information returns. So it's really not just the 1099s, but I get that's a confusing issue there. So bottom line is vast majority of UEN customers have to file electronically. There are a few of you that may have very small payrolls or none at all, and don't give out many 1099s at all, so that you might fall in that case. All right. The email data, as I mentioned, for 26.1 should be this Monday. Not a hard set date, but that it should be out by Monday evening. Look for it Tuesday morning, I would say, in case it may not go out right early in Monday morning. All right. Did you say the BSO number is entity specific? That I'm not so sure about that. So you're going to have to check with Social Security Administration for that. That is it's possible that's not. All right. Okay. Lots and lots of TCC number questions. How do I know what it is? Is it the number we use to e-file? So that is something, again, we'll get the overview. We'll have some links in the overview of the 2026.1 that you can check out with the different agencies, the fire system. If you already know you use IRIS, you can check in the past, then you should have a TCC number for that. The Social Security Administration for W-2s, the BSO number. So we really cannot answer those questions. You have to contact those agencies, but you do need those codes for filing, and there is a process of obtaining them. You have to verify with the IRS or the Social Security Administration. All right. All right, question about the filing W-2s through Ohio Business Gateway. If you file so you're basically going to have to check with Ohio Department. What do I want to say? The Ohio Department of Transportation is stuck in my head, but check with Ohio Department of Taxation and to see if you need to file online. Basically, most customers have to file online. I believe I think you may be thinking of the slide that said that for 1099s, filing a copy of the 1099, e-filing it to Ohio. And if you are, the wording that I saw on their website was that basically, if you pay electronically, which through Ohio Business Gateway, for your withholdings, your Ohio withholdings, then you have to e-file the 1099. And we have that built into the software as an option when you create the 1099 files to create an e-file for Ohio. So that's just a toggle. You switch over, create one for the fire system and one for that's compatible with Ohio Tax ID is the portal that they use now. Someone's just mentioning that you can manually enter in 1099 information. That's true with the IRIS system. So especially if you have, like, say, a very small number of 1099s and you haven't registered for either, it's really up to you if you want. UN will produce a file. So if you have 100 folks you're sending 1099s to, and you don't want to manually key that in if you don't have to. So I would use the FIRE system if you can get a TC code for that. But if you already have one for IRIS and you have a small number of those that you're sending over, that's something you can manually do through the IRIS system. So UN just won't produce an electronic file for it at this time. Someone is concerned because the IRS website says the FIRE system is unavailable. The FIRE system is available this year. They are phasing it out. It's true, and when they phase it out, UN will have an option for the IRIS system to create a file, but that's not for 2025 point. That's not for the fiscal year 2025. The FIRE system is still up and running, maybe today at the moment. I don't know. I haven't checked their website if it happens to be down, but that is something that they've indicated it's not going away, and so UN is continuing to use what we've been used for a long time, the FIRE system. And certainly when they discontinue that, we will switch our file creation process over to the newer IRIS system. All right. A lot of the same messages about Ohio. Yes, you can create a file for the Ohio 1099. Okay, this is a different question than TCC, so that's nice to hear. So I have someone who's retiring in May of 2026. In the field that you are, I forget which one it is, 4B, top of my head, that you can indicate a new fiscal officer. You can go ahead and type in the new fiscal officer. I guess that's a little bit different in that I think it's stated as April 1st if they will be taking the reins. So I don't think it would hurt if you put that in there, but either way, really, it's just sort of a note to bring it to our attention. But you really want to email us or call us when the time comes close to your retirement, and we'll give you directions on how to get all the information in for the new fiscal officer and what to provide them. All right.
All right, this is Alex again. Thank you for all the questions that are coming in. Questions are still coming in. To keep us moving and on time, we'll keep stacking those questions up and address them again with a Bob Q&A segment. Next, we have a video coming up from the Ohio Auditor State. But before we get to that, the no tax on overtime, I know that is the big pressing issue and it's throwing everybody for a loop. We cover it again in detail later. And I definitely recommend you go to the IRS website on that one. Just to clarify, the portion you'd have to calculate manually, and we'll go over it all later, but you have to calculate it manually based on the overtime they've worked for all of 2025. So you have to find out how much they've worked in overtime, and then what is the portion you have to put in box 14, that is the qualified overtime. So that is the 0.5 rate. So say they've worked and they've made $10,000 for the year in overtime. A third of that would be the qualified rate, because that's the 0.5 of the 1.5 rate. They can't claim the full 10,000 in box 14, because then they'll go to jail. But as per the IRS, please check your rules. It's only that 0.5 rate, which is the overtime separated from the base rate, and that is what you're gonna put in the box 14. But the onus is on the employee this year with the IRS to claim that. So if the employer does not put it in box 14, again, the IRS strongly recommends you do so, but it is not required this year. So if you want to do it, great, strongly recommended. But if you don't, it's still on the employee to figure out their overtime and what is the qualified portion by law. Again, if you're doing it, run an overtime report. You have different reports in UAN, and we're going to go over it in detail again later. You could run the wages and overtime report. We strongly recommend you run the wages export, because some people set up overtime differently. It could have been a different fiscal officer that set it up. And it might work fine, but it might be set up as an earning instead of an actual overtime. So we recommend you do the wage export under payroll, reports and statements, wage reports, and then the very bottom one is a wage export that will drop it in Excel, and it'll tell you the name of all your earnings in there and how much they made year to date. There's also the wages and overtime report in there. So you're gonna have to figure out how much your employee made year to date in 2025 for overtime, and then it will be the 0.5 section, or basically a third. Refer to the IRS for the calculation, but roughly it's a third of that overtime, the 0.5. That's what you have to put as qualified in box 14. We'll go over it again. Up now is the video from the Auditor of State.
Hello, I'm Ohio Auditor of State Keith Faber. I'd like to welcome you to this year's 2025 UAN training. I hope you find this a rewarding experience. On a serious note, I'd like to discuss a matter that we're experiencing all over Ohio. Cyber attacks against Ohio's public offices are on the rise. Just since 2023, more than 228 attacks have been reported, costing local governments over $8 million in taxpayer money. Cyber criminals often use three main schemes: ransomware, where hackers look at an organization's data and demand payment for locking it up; business email compromises, where criminals access or imitate a trusted email account to steal information or funds; and vendor redirects, where they send a spoofed email or other request for a change in bank account or other information to redirect payments to the criminals and not to the lawful vendors. These schemes have hit schools, libraries, cities, and counties all across Ohio, sometimes costing hundreds of thousands or even millions of dollars. The good news? Most of these attacks are preventable. Never ever change payment or banking information based solely on an email or phone call or other electronic request. Look for red flags like urgency and altered email addresses, poor grammar, or unexpected attachments. Always verify changes, preferably in person. A new state law now requires all political subdivisions to adopt a cybersecurity program. It also requires you to report cyber attacks and justify any ransom payments with a formal resolution of the legislative body. This ensures that every public office takes seriously cyber threats. Public officials can be held responsible when preventable mistakes lead to financial losses. The lesson is very simple: verify everything. Thanks for allowing me a few minutes of your time today. Together, if we work collaboratively, we can make Ohio the best place to live, work, and raise our families.
All right, and that was the auditor there, and he had great information. So we are seeing a rise in scams, and what they seem to be mostly are emails. So they get into either your email system or your employee's email, and they will send you a message that looks very legitimate from your employee, and it says, updating my EFT or banking information for direct deposit. Please send it to this bank. You never want to do that based on an email. Call that employee or see them face to face, or make it a policy to get those those changes in paper. But the EFT paychecks via email are the biggest scam we see right now. Also via email, we're seeing where they compromise your email system. They are seeing how you communicate back and forth. And then maybe there'll be a department head sending you a message saying, hey, we need to pay this vendor this much money. And that money goes out and it's fraud. So don't go out of your normal procedures via email, and make sure your procedures address that you verify any kind of non-typical changes. So banking changes, you want to make sure you verify that with the person or in writing, and you take care of those. Up next, I'm going to turn it over to Lauren, and she's going to present. So take it away, Lauren. Thank you very much.
Thank you, Alex. Good morning. We are going to start talking about the 2026.1 download. As Alex mentioned, that is scheduled to go out next week, so you should see that in your email. If you don't see it in your email, make sure you check your spam box, or if you have recently updated your email address, give us a call so we can make sure that we're sending the download to the correct email. Like Bob said, we will send that email download to everybody, but the people who have selected to receive the USB drive will receive that USB drive with the instructions in the mail. If it arrives damaged, or it does not arrive, on time, please call us, verify your mailing address, and request a new one. We will probably recommend that you try the online download, just because, like Bob mentioned, it's coming up on holiday time and it can take a while for that recent USB drive to arrive. And again, if you don't receive the USB drive on time, or if it arrives damaged, we will recommend that you try the internet download, just in case you have sufficient bandwidth to do that. And we'll email that information to you if you call or email UAN support. When you're going through your installation, installation problems can be very frustrating. Definitely always feel free to call UAN support, but a few of our most common questions can be answered by looking at the instructions that are in the email. We get hundreds of calls every installation about what the UAN installer password is. And just kind of a quick note, that is actually number 2 on the download instructions. So number 1 is the link that you're clicking. Number 2 is the password that you will enter in. So if you're unaware of what that password is, it's the fiscal officer, capital F, capital O, all one word. And then one of the other common questions is, what if the install does not start automatically? So we're going to go over what that looks like, but those instructions are also given to you with the either USB or the digital download. So if you receive the USB, you may plug that USB into your computer and nothing happens. What you'll want to do if that happens is click your file folder icon on the taskbar, and then you're going to go to the folder of this PC, and then double click the USB drive. It should look something like the one here, says something similar to UAN transfer. That's going to pop up a folder and give you 2 options for install or setup.exe. Everybody always wants to click the install because the setup.exe kind of looks wrong. It has an older date. It doesn't look like it's the right install that you need to do. But if you're following along with the instructions, you'll know that you have to double click that setup option. If you are doing the digital download, you will sometimes it goes really fast and you're not really sure what happened. Did it download? Did it not download? You can check on that. Again, in your file folder icon, under the downloads folder, and then you should see where it says 2026.1 in your downloads. You will get the same screen with the install and setup, and it's the same process. It is the setup.exe that you will click. That'll start the install on your computer. If you're unsure if you completed the install, when you go to log into UAN support, you will see in the bottom left-hand corner what version you're on. We did have a question in the chat earlier about how do I see what version I'm on right now. This is where you would see that. Where it currently says version 2026.1 on the screen is where it should say currently version 2025.2. Just a reminder, if you are not currently on version 2025.2, you will not be able to do the 2026.1 install. So call into UAN support immediately and get that 2025.2 install information. So we get a lot of calls when after the new version is downloaded, the 2026.1, of where is temp mode? Temp mode is something that you have to physically go in and unlock. That is done under General, Maintenance, Year End, and then Open Temporary Mode. This is going to allow you to work in both working years of 2025 and 2026. And when you open temporary mode, you're going to get the option to revise your withholding names if needed. If you have no changes, you can just hit save. If you had any typos when setting up your withholding names, or if anything changed just a little bit, you can update this here in that revised name column and save. This is not where you would add a new withholding. So if you have a new withholding to add, we are going to discuss that shortly. You'll also get another message that you are now in temporary mode. So this is going to remind you that you can select what work year to work in, either 2025 or 2026, and you have access to temporary mode until February 28th, 2026. If you go to log in on March 1st and you have not closed your 2025 yet, you will only have access to 2025, and you will not be able to post any 2026 transactions until you close 2025. So this is what that screen is going to look like when you go to log in. You will have to select work year 2025 or 2026. Make sure you're carefully reviewing which work year you're wanting to work in, because you don't want to accidentally post transactions in the wrong year. So each time you log in, you will have to select which work year you want to log into. I'm going to check for questions here really quick about okay, looks like some of the questions we have are more entity specific. Still have a lot of questions coming in about overtime. So I'm going to continue on, and if you did ask a question about that section, it'll be answered in the chat and possibly pushed to everybody if needed. So my first trivia slide here, Wednesday in the live, I had about 77 people yell this at me. So this one's pretty easy. You know, these pictures were taken in Cleveland. For the sake of not, we have a lot of messages coming in the inbox. So I'm not going to have you guys put this one in the inbox, but these photos were taken in Cleveland. And then we're going to move right along here. So the next couple of sections, we're going to be talking about what you can do in 2026, even while you're working in 2025. So as soon as you get that download next week, you will be able to do some of these items that we'll be discussing next. Oh, and I just had a really good question come through the inbox of what is the purpose of temporary mode? So I'm going to address that one really quick because this is a good time for that. So temporary mode allows you to go in and do 2026 prep with your budget, your revenue accounts, revenue budget, appropriation budgets, and get all of that put in place. So on January 1st, you are ready to post 2026 transactions. It also allows you while you're in 2026, so come January, you can still post your receipts for December. You know, anything that you need to post or correct in December, you'll still have that option. We're going to give several examples going forward. So if you have any additional questions about that, please let us know in the chat. So just a reminder, we're logging into 2026 here, and we're going to talk about some accounting items that we can work on, like I said, as beginning as soon as you download 2026.1 if you are ready for those items. That includes appropriation accounts, appropriation budgets, funds, revenue accounts, revenue budgets. You can also add new items like vendors. If you have a new vendor that you know you're going to be working with, you're switching health insurance companies, anything like that, you can go ahead and set up your new vendors under General, Maintenance, Vendors, Payees. And for your budgets, you want to make sure that you have all of your numbers organized before calendar year 2026 starts. So if you don't have those ready yet, you know, you want to make sure that you're prioritizing preparing your 2026 budget in December. That way everything can be entered so you can go live in 2026 and post your payroll and any payments that need to be posted in 2026. In our budget module in UAN under budget transactions, financial worksheets, this budget worksheet, the financial worksheet, if you choose to use it, can really help you kind of organize your account codes and your budgets before you enter anything into UAN. You can export this worksheet, and if you do, make sure you include your account codes, and then that'll put everything in a nice, neat, organized manner so you can kind of work through your budgets before you put them into UAN. So to add in your revenue budgets, again, you're in working year 2026 in temporary mode. You go to Accounting, Maintenance, Revenue Budgets. On the Revenue Budget screen, you'll hit Add. If you get to this point and you see a bunch of funds here, you're in the wrong working year, if this is the first time you're looking at it. So once we hit Add, you're going to get a note saying that they can only be entered once per fund. So you want to make sure when you're entering these in that you do a double look before you post, because any changes made will have to be made by supplementals. You have to work one fund at a time. So we're going to start with our gasoline tax fund here. So when you're doing your revenue budgets, you can't go in and do part of your fund and save and close. You have to go in and do all of your fund and save and close. After you get this fund done, if you want to take a break, if you're not quite done with maybe your general fund, etc., you can come back and do those later. You just have to complete each fund before you can save and close. So we're going to enter in our budget amount here, and that column, you know, has the reminder that that is for the full year. So that'll be your full 2026 revenue budget. And then enter in your effective date of January 1st, because that is when you want your revenue budgets to take effect. Your temporary appropriations or permanent appropriations, if your board or trustees decide to adopt those in December, should be adopted in December. So you want to make sure that you have those ready, if at the latest, maybe early January, because until you have your appropriation budgets put into UAN, again, you will not be able to make any payments, including some payroll payments. Those temporary appropriations should take effect January 1st. And those are entered into UAN under Accounting, Maintenance, Appropriation Budgets. When you get to that screen, you're going to have the option to add temporary or permanent. Again, this is a choice based off your entity. We recommend starting with temporary, even if you do adopt permanent appropriations, just because it buys you a little bit of time if you want to make changes. Temporary appropriations are good for the first quarter of the year. And there is an option if you do happen to have your full year's appropriations approved, that you can put those in and import them into your permanents before April 1st. So, you know, in the UAN system messages pop up all the time, and they can, you know, I think most people are kind of in the habit of, like, when you're doing payroll, it's the same system messages, you know what to expect. During year end, we encourage you to read these system messages because there's a lot of really good information as you're going through your year end process. So this is just a reminder: temporary funds like revenue funds, or temporary appropriations like revenue budgets, can only be entered in one fund at a time. So you want to make sure that once you start that fund in UAN, you complete it before you save and close. So since we entered in our gasoline tax revenue budget, we're going to enter in our gasoline tax appropriation budget. So we're going to go ahead and enter all of those in. If you are doing temporary appropriations, it's going to say Q1 only. There's nothing preventing you from putting in your entire years if you have those prepared while you're in your temporary appropriation budget. If you adopted your temporary appropriations in December, you want to put your effective date as January 1st. If you do not adopt those appropriations until January, you want to use that January date for when they become effective. Once you have your revenue and appropriation budgets in place, that'll allow you to put in any purchase orders that you want to have in place starting January 1st. Under accounting transactions purchase orders, you have the option to add or duplicate. So most of you probably know how to add just a regular purchase order, you know, your standard, you know, purchase orders. We're going to go over the duplicate option. This can be a really helpful tool in the new year. So when you open this duplicate purchase order option, you will have the option, or you will select what type. So you can only filter by either PO regulars, BC regulars, or BC supers. You'll have to filter those one at a time. But your status, you can put both, especially since probably most of your first quarter purchase orders have probably already been closed at this point. So we're going to see here, we're looking at the first quarter 2025 purchase orders, blanket certificates that our township had in place in 2025. And we want to duplicate those. So we're starting 2026 with the same blanket certificates. We'll enter in the new dates and hit OK. Then we're going to take a look at our PO regulars and take a look at any POs that we want to start the year with. So for our entity, that's going to be our loan payment that we need to pay, our employer share dental and health insurance, and our fire contract is going to be due early in January. So we're going to select those, enter in the new dates for 2026, and hit OK. Duplicates are just the starting point. If you need to adjust those purchase orders a little bit, you can edit those. This will just batch them for you. So once they're batched, if you want to do a slight increase for any of your blanket purchase orders, or if maybe you have a loan payment that's going to increase, decrease, anything like that, you will be able to edit them before you post and print. So make sure you take a look at those. So at this point, you know, you can be any point between Monday and the end of December and be ready to go live for your accounting setup as of January 1st. So we have a couple questions in the chat I'm going to address really quick since we're here, is about you know, are temporary appropriations no longer mandated by the ORC? This is something that you're definitely going to want to research yourself because it is a compliance, but we have heard from current fiscal officers that you do no longer have to adopt temporaries, that you can go straight to permanent appropriations, but make sure you're checking on that for yourself to make sure that's applicable to your entity. And that system message, when you're adding in your temporaries, will direct you to the correct ORC. All right, so our next trivia question here is going to be, you know, where were these photos taken? The inbox is still very busy, so I'm not going to have you guys participate. I apologize. But that way, those questions that are coming in the inbox can be handled. Okay, Bob's going to hop on here really quick and address some of the questions that have been coming into chat.
All right, can you hear me all right? Yep, okay. So the main thing I want to address here, because I guess I'll ask that if you have any more questions on no tax and overtime, please do not send any more through chat. We've got like dozens and dozens of variety of kind of the same questions for no tax and overtime. So I'll just reiterate a few things here. Number one, UN, we are not tax experts. We are not IRS tax experts. So, you know, take what we say on that with a little grain of salt. Number two is that IRS has provided some information, but it's very limited. I mean, as far as we can tell, as not being tax experts. So what seems to be the case, to reiterate, is that they are encouraging but not mandating that you report the not quote unquote non-tax portions, only the federal related, in box 14 of the W-2 this year. That seems to be the case on box 14. Another question that's coming in, there's another popular question coming in is, does UN automatically calculate the 0.5 portion that is quote unquote no tax? And the answer is no. This is a new thing. It's very unconventional, and we don't have a calculation for that. We will report your overtime like we always have. The other question is, hey, I've been taxing, you know, withholding federal tax on overtime all year. I've been doing that wrong because of this. No, this is not, and we can answer that for sure. This does not affect what you withhold for taxes on overtime. Your withholdings, if they've been set up right, you've been withholding federal taxes, that's fine. This has to do with what the employee can claim as a tax deduction or credit. I'm not sure on that one, but they can claim it on their W, you know, when they submit their tax reporting in April. So don't worry about changing what's withheld. That was a big question that's coming in. The other thing is, so UN does not, I think I've covered, UN does not break down the 0.5. I wouldn't expect that in the future either, in future years, simply because the various overtime possibilities that UN customers have, that would be extremely hard to program around to factor in every possible overtime scenario that our customers have. And without explaining that further, that's just the case. So I don't expect that to be in future years as well. It's just something that we of course we report the total overtime that you've paid for each employee. There is a page in the 2026.1 overview that's coming out next week. So in the document, you get an overview. It's usually long, like 6-7 pages, but there's one page that is on this subject. So everything I'm talking about here is going to be mentioned. So look for that as a reference. The other question that's coming in is, hey, what about double time? What about comp time? Do I factor any stuff of that in? Well, we do not know. That's not clear to us, and you'll have to consult with a tax advisor on all of those particular questions. Hey, what about shift differential for police officers, something like that? Is that considered overtime in the 0.5 and all that? That is not a UN question. All we know basically is that it's if they are encouraging you to report in box 14, but not mandating it as far as we can tell. And just that portion, the 0.5 portion of standard 1.5 overtime, as far as we know. If you want to provide something to UEN, to your employees, or you want to calculate the total and figure out how much the 0.5 is to provide with them and put in box 14, then the best report for that is under payroll, reports and statements, wage reports. There's a bunch of reports on the wage reports. The last one in the pick list is wages. Let me make sure I get that right. I said that wrong Thursday. Wage reports and wages earning export. So Alex is going to hit this again when we get to W-2s, but we're getting like such a flood of questions on it. I wanted to address it. So please no more follow-up questions on that. We're just missing maybe some of the other questions related to the other topics we're covering here. So I guess that's a really hot topic today, and that's about all we can provide. Again, Alex will hit it once more again later on when we get into the details of the W-2s. All right, I'm going to leave it at that, Lauren, and you continue on with next steps.
Okay, so we've had a lot of time to figure out where these pictures were taken. Those were taken in Hocking Hill State Park in Logan, Ohio. So we're going to move on to New Year payroll. And again, this is items that you can do as soon as you get 2026.1 for 2026. So some of those items are new earnings and leave, updating withholding rates, updating your skip calendar, and updating leave balances. And we're going to go through each one of those in more detail. So just a reminder, make sure you're keeping track of what work year you should be in. Any new payroll items that should not take effect until January 1st need to be on working year 2026. So you really want to make sure if you're making payroll changes that you're making them at the correct time, because if you make them in 2025 and you have another payroll to post, it's going to also update that. So if you make it in 2026 in temporary mode, then it won't take place until that first posted wage of 2026. There was a comment in the chat that they can't hear my audio. You can hear me? Okay.
That might be one person who's survey should probably check.
Okay. Just wanted to make sure. So to add new earnings and leave under payroll, maintenance, earnings and leave, you'll want to hit add. Adding new earnings is not really a common New Year activity. This would only be in place if you maybe have employees that are switching from part-time to full-time starting the beginning of the year, and you want to get that prepared. Also with new leaves, typically doesn't happen very often. You know, maybe your entity has decided to adopt personal leave at the beginning of the year. You would do that under this new earnings and leave option. Adding new withholdings can be a little bit more common, especially with local taxes or insurances. So we're going to talk about how to add a new withholding. Under payroll, maintenance, withholdings, you want to click add. We're going to go through an example of Ohio deferred compensation non-Roth. The most important thing when setting up a new withholding is that you're selecting the new process group. So for our example, the deferred compensation non-Roth, it's easy. It's already in your UAN system as a B00 type. Local taxes, school taxes should follow the types that are in UAN. Those are set up to withhold in the correct order. Now, cafeteria plans and miscellaneous withholdings, those are ones that you never want to make an assumption on. Cafeteria plans are pre-tax, miscellaneous withholdings are post-tax. So those could have big changes to some of your other withholdings if they're not set up correctly. So when you're setting these up, make sure that you know for sure if you are setting up a pre-tax or a post-tax withholding, or if it's anything else that it's falling into the correct type. So here's our completed add new withholding screen. We have our deferred compensation non-Roth and then our Ohio Public Employees Deferred Comp as the payee. If you're adding a new withholding and you have not created a payee, if it's a new payee, you want to make sure that you go in and add a new payee because all withholdings need payees. And you don't want to put something random in there because when you're paying your withholdings, that's how it's going to pull your withholding payments. So you want to make sure those are correct. That is done under General Maintenance Vendors Payees. And then you want to make sure when you're adding that new vendor that you have selected under the type payroll withholdings. If you are setting up a withholding that will have an employer share that you want to pay from the accounting module and an employee share that you plan to post on the payroll module, make sure that that type accounting purchases and payments is set up as well as payroll withholdings. So when you're making those payments, they're showing up in both areas. And again, to add a new vendor, that's just under General Maintenance Vendors Payees in Add. So most of the payroll examples that we're going to talk about today are two-step processes. So once you add that new withholding, you need to make sure that you go in and add it to the employees. That is done under Payroll Maintenance Employees, and we're going to walk through an example. So when you're in your Payroll Maintenance Employees screen, you want to select the employee. So for our example, the employee that chose to do deferred compensation non-Roth, we're going to select that employee record, go to the Withholdings tab on the right side, and hit Add in the Withholdings list. Then we're going to put in our withholding name that we're wishing to add and the amounts in the bottom. If you have a rate, you can also put that rate there. The next thing that you would want to do is attach it to an earning. So on the Earnings tab, you want to apply that withholding to an earning to make sure that when you're posting their wages, that withholding is coming out of that earning. Something I always recommend when doing any changes with payroll, when you go to post the first wage that this should apply to, make sure that you're reviewing the withholdings when you're adding the wage. Make sure everything looks right, because if you were to go to post this wage and that withholding is not there, then something went wrong. If you can't find what went wrong, definitely call UAN support and we can take a look at that. But most of the time it's this setting here is it's just not attached to an earning. All right, really good question that's on this topic is if you have a new tax that you're, oh, they just moved it from me, sorry. We'll adjust that in a minute, I guess. Bob stole it. All right, so to update withholding rates, you would, this happens a lot if like school or local taxes increase effective January 1st. Can also happen if your insurance rates are increasing. You'll want to make sure again that you're in working year 2026 in temporary mode. I think this is the first screen where we show kind of what that's going to look like in UAN. So when you're in temporary mode in the top right corner, it's going to say temporary mode and have the working year and say what year you're in. And there's that constant reminder that you have to close temporary mode prior to March 1st. And again, any changes you make in January or in temporary mode 2026 for January will be effective in January. If you make these changes in temporary mode 2025, they will update immediately. So make sure that you're logging into the right year when making these changes. Again, it's a two-step process. You need to update your original withholding, and then you need to update the employees who have this withholding on an earning. We're going to take a look at how to do both of those. So to update your withholding, that's under Payroll Maintenance Withholdings. You select the withholding. For example, it's our Buckeye Village income tax. It's going to increase by 0.5%. So we're going to mark that withholding and click Edit. And in the withholding screen, you can see in the bottom left corner here that you can update that rate to 1.5%, or you can increase it, decrease it to whatever it should be. So for example, it's that 1.5%. And then the second step to that is you need to update all of the employees that have that withholding on an earning. So there's an easy way in UAN to do this under Payroll Maintenance Withholdings Editor. We're going to go in there and you can select your withholding from the top of the screen, and we'll select that correct income tax. We're going to see all of the employees that have that rate or that withholding applied to an earning. We're going to select all of the employees that need updated. And then in the bottom, we can do the change to and increase that rate. If you're with updating dental or medical insurance or anything like that, where maybe everybody has different rates, you can also update those individually. Just make sure you're only checking the employees that need to be updated to the rates that you're updating. So in our example, I hit the save and you can see where everybody has updated to 1.5. So you'll be able to take a look at all of your employees with that withholding before you save again and close out of that. And again, if this is done in working year 2026, this will apply to the first posted wage in 2026. All right. Give me just a second. I'm going to review to see if we have any questions.
Okay, so Bob again. We just got a whole bunch of questions all at once, so I'm gonna need time to kind of look them over here. Okay, questions about purchase orders and blanket certificates. Someone said, hey, I set them up for the whole entire year and haven't had a problem. All right, well, as long as your temporary appropriations, or if you have temporary appropriations, if your POs and BCs, if you could potentially spend all that money in the first quarter, then that would be okay. The UN software is just going to follow the numbers with your appropriation budget that is in place at the time that you open a PO or BC. But the purpose of temporary appropriations is only for the first quarter. So even though you might get away with putting in the budget for the whole year, the intention is that your appropriations, when they're in temporary appropriations, should only be for the first quarter of your expenses anticipated, and not the second, third, and fourth quarter anticipated expenses. So if like your temporary budget would seem to, so again, it may not be technical problem in some cases, but you just have to look at the Ohio Revised Code on what the purpose of temporary appropriations are. So I'll leave it at that. All right. Okay. This question about ODJFS. Let's see. All right, good question here. If I have a new employee starting in January 2026, can I add him when in temporary mode? Yes, absolutely. That's one of the main reasons. Even if the question is jumping away from me. Even if you are, even now, like once you get version 2026.1 and install it, even in December, you can log in. As long as you log in 2026, if that employee doesn't get paid or start or anything until January, just log into 2026 and add that person's information in working year 2026. That's kind of our whole thing here, because you can still be working on wages and whatever in the old year in 2025, but do some setup for the new year. So that's get that version update and open temporary mode as soon as possible. It'll let you start preparing for the new year without affecting the old. Okay, let's see here. Can I make an additional withdrawal automatic? If you employees want to add Fed withholdings or percentage of wages to be deducted for state and federal taxes. Nope. Lauren wants to jump in on that.
Okay, so I decided to take over this one because I had to research this one pretty heavily for our LGOC presentation. You cannot do percentage of wage additional withholdings for state or federal because the W-4s and the IT-4s do not allow that as an option. So they can withhold an additional amount, but they can't withhold an additional percentage because what you put into UAN should match exactly what your W-4 and IT-4 say.
My mic was still on. Yeah. Okay, I just realized what you're asking. Yes, that's absolutely. All right, I'm going to save a few of these for individual responses here. Okay, what's the best place to find the school district tax changes? The Ohio Department of Taxation, they have a page. If you once you get the version update, that fixes a little problem with the link. If you go to payroll, maintenance, and withholdings, and then kind of edit or display one of your school tax withholdings, click on the little question mark there. It's going to take you directly to Ohio Department Taxation's Finder for school taxes, and you should be able to find the school district that you're looking for and any rate changes coming up in the new year or that may have happened mid-year. Okay. Okay, let's see. Okay, this question about purchase orders. I'm not sure what you mean by that. How can I copy over to the new year? How can I access POs? So purchase orders will, if you do not close purchase orders in 2025, they will carry over to the new year. So maybe there's confusion about that. They will automatically. So if you have a balance on a PO that's still open in 2025 and you do not close it in the old year or reduce it to the amount you're going to spend in the new year, then that whatever balance is still available is going to carry over to the new year. So you want to review your purchase orders in the purchase order reports, like under payroll transactions, payroll reports and statements, purchase order reports like the PO listing or the PO detail. You also can go to the utility directly under payroll. I'm sorry, I said payroll, I meant accounting. Under accounting report and statements, and then under payroll accounting utilities, and then the purchase order utility, that's going to show you your open purchase orders. And if you do not want to carry over the purchase order into the new year or the balance of it, or you want to reduce it before you carry it over, you want to go make sure you're logged into work year 2025 in temporary mode and close it in that year if you're not going to use it at all in the new year. If you are going to make some payment but not the entire balance in the new year, and you have you know what the invoice is going to be, then you can make an adjustment in the work year 2025 to reduce it to the amount of the final payment that you'll have in January of the next year. So I hope that answers that question. Is there a spot in UAN put the employee's last day of work when they quit or retire? You can do that in the earning. You can't do it in overall for the employees. So that would be under payroll maintenance employees, and you would edit the employee, but then you would edit that, go to the earnings tab and edit one of the particular earnings, like their main earning. They may have a couple of different types of earnings, maybe a seasonal job or something like that. But if they're quitting, you can put in a termination date. Doesn't mean that you fired them, but that's the end of their employment with you. And you can put the termination date or the end date in by earning. So they have several positions, they're just quitting the job overall. You can put a termination date for both. All right, and let's see if we have any other questions. Coming in here. Okay, can I just do a 2026 certificate? No, I lost that one. Alex is getting busy. These. All right, can I do a 2026 permanent appropriations based on my 2025 amended certificate of estimated resources, or is the actual 2026 certificate of resources required to only do temporary? I'm not sure exactly. I guess I'll just the general rule of thumb is that if you do not have your most entities do not have their amended certificate before January. I know I talked to some people, and their county auditor does things a bit differently, and somehow gets an amended certificate for 2026 in late December. That's very unusual because you need to certify your year-end balances, and you don't really know that for sure until you've done all your adjustments and fixes for the year, then your final payroll, your final payments, receipts for up to December 31st. So really, you should be operating on your carryover cash and your, if you need to do for your temporary appropriations, your official certificate of amended official certificate of resources available for 2026. That's an estimate that's going to be amended after your auditor gets your county auditor gets your actual ending balances. So that's what you should be operating on most of the time. There are some weird exceptions to that, but you can contact us by phone if you think you're in one of those exceptions. All right. Okay, I think the rest of them will handle individually or say for the next Q&A time.
Thank you, Bob. I did have one request in the chat just to show where to do the duplicate purchase order. So I'm going to bounce back to that really quick just to show that screen and where that screen is at. And then if you have any additional questions about how that works, please feel free to call into the support line and they'll review that with you. But that duplicate option is under accounting, maintenance, purchase orders, and then right beside the add button that you're used to, you're going to have that duplicate option. I would encourage you to go into training mode and play around with it a little bit. If you have never used the duplicate option, training mode's a really good place to see what that looks like. And you would duplicate those in your 2026 working year after your appropriation and budgets are put into place. So give me just a second here and we'll hop back to the next section. We're going to go over skip calendars and then we'll take a little break. So skip calendars are a really great shortcut if you have withholdings that, say for example, biweekly withholdings that are calculated based off 24 pay periods. Biweekly pay periods you'll end up having 26. So sometimes you have a 3 pay period month where you should skip those withholdings. Never make an assumption that you shouldn't withhold for 26 pay periods. Always make sure you're reviewing your withholdings. I know sometimes insurance will give you the month of December to where you don't have to withhold, so you can set that up in your skip calendar as well. These are very entity specific. I know Wednesday we had quite a few questions that were very specific to certain entities and certain withholdings. If you do have one that's more specific and not really how the skip calendar works, I encourage you to call into UAN support and discuss that because sometimes those pretty specific ones require a little bit more information. So the skip calendar only works for employee withholdings that have the skip calendar or skip option active. This is done in the edit withholding screen. We're not going to show a demonstration, but if you're interested in setting that up for some of your withholdings and you don't have this and you don't see it in this like the apply option that we're going to look at in just a minute, call into the support and we can show you how to activate that on your withholding. So the first thing that we recommend is that you lay out your 2026 pay schedule. Just a reminder, this is for our fake township. This is fake pay periods and fake post dates. This is most likely not your pay periods. So don't follow the actual information in here. This is just an example. So for our fake township, we have 3 post dates in January and in July. So our withholding, our dental withholding, is calculated based off of 24 post dates. So we want to make sure that we are skipping those 3rd post dates in January and July. So that is where the skip calendar editor can come into handy, because when you're doing these wages, you may forget, and then you either have to, do some creative adjustments or do a wage adjustment. So this will allow you to set this up. So come July, it's not something that you have to worry about. Or you may have several that you need to skip. So when those come up, this just will automatically do it for you if it's set up correctly. Oh, another thing with laying out your pay schedule like this, if you are an EFT, if you process your wages through EFT, this will help you determine if you have any EFTs that are going to hit on a holiday, because typically banks will not accept EFT files to be posted on holidays. So this is a good way to kind of know if you're going to have one of those coming up in the year for your pay schedule. So these kind of pay schedules can be very beneficial. So to access your skip calendar editor, that is done under Payroll Maintenance, Skip Calendar Editor. We already have a biweekly skip 3rd paycheck set up. You may have one in your system. If you don't have the skip calendar in your system, you can hit add and create one that's custom to how your skip would need to be handled. So we're going to follow through with that example and skip that 3rd pay period in January and July for our fake township. So you would select your skip calendar that you have in there, hit edit. And when we were looking at our pay schedule, that post date was January 30th for that 3rd pay period. But with the skip calendar editor, you can see where it says in the top right corner that you want to select a pay period date for that post date. So that's where this, if you have this laid out, it's going to be very helpful, because if we look at that post date of January 30th that we're wanting to skip, we actually want to skip one of the pay pay period dates. So we can select any date between January 3rd and January 16th to skip that post date of January 30th. So we're going to go back to the skip calendar editor and select the pay period date within that time frame for January and July, because that is what our fake township follows for our pay periods. And a reminder, this is just an example. We're going to save. And then it gives you a system message that you have saved your skip calendar. You've saved your skip calendar, but you've not applied it to any withholdings. So to apply it to a withholding, once you save it, you're going to see skip selected too. This is going to be however many skips you anticipate that you need. It may be 1, it may be 12, however many that you're trying to skip. That's what the skip selected number should say. So we're going to select that skip calendar again, and we're going to hit apply, which is in the bottom right corner. And it's going to show us a list of withholdings that we can apply to. So we'll want to select our frequency. This is a biweekly withholding that we're editing. If yours is monthly, annual, however, you'll want to select the correct frequency. And then select the withholdings. Ours, we have the skip calendar applied to dental, health, and life. You cannot apply the skip calendar to things such as federal, state, and Medicare, because there are rare, or if any, circumstances where you should skip those withholdings. So we don't even give that to you as an option. So when you're setting up your skip calendar, if you have any questions about what withholdings are popping up here, or if they're not popping up here, give us a call and we can kind of guide you through how to set that up in your system. But for example, we're going to select our dental insurance. This shows all of our fake employees who have that dental insurance. We're going to select all of those employees and hit save. That then applied that skip calendar. So when it comes to that pay period, that post on that third pay period, it will skip withholding their dental insurance, because that's based off of what we need to calculate for our withholding payments. All right, so to do new year leave balance adjustments, that is done under Payroll Utilities Leave Balance Adjustment. You will see the system message every time. Now you can do leave balance adjustments at any point in the year, but year end is one of those times where you may do that every single year. Make sure that your entity has leave policies to support any changes that you make. If your entity has never adopted leave policies, if you've never reviewed them, you may want to take a look at those, because you know, if you end up paying an employee too much vacation time or maybe not enough, those are things that audit takes a very close look at, because it's like giving or taking away money from your employees. So you want to make sure that you are calculating the leaves correctly and that you are adjusting them correctly based off of your policies. Wednesday at the in-person, we had a lot of questions that were very entity specific. Your entity sets your leave policies. There may be some guidance out there on what you can and can't do, but I think it's pretty broad. So you want to make sure that you are looking at your own policies anytime that you're making changes. So we're going to go through a couple examples of how you can use the leave balance adjustment utility. One way is by employee. For our fake township, our employee Henry is the only employee that we have that gets 120 hours worth of vacation time effective January 1. That's for the whole year. So this is what our policy states for this employee. By employee can also be used if you're making error corrections. So, you know, if you're self-auditing your time cards and your wages and you realize that one of the time cards was vacation leave and you accidentally paid out regular wages, you can go in and decrease those leaves as well at this time. Another common adjustment is by leave type. We'll go through two examples here. our fake township has a use it or lose it policy for personal leave. So this means, this policy is if they don't take all of their personal leave by the end of the year, they will lose the remaining. It's not paid out or anything, they just lose it. So that adjustment is done by leave, and we selected that personal leave, and we can see here that only our employee Barry has a current balance remaining. So if we want to adjust that down, we'll put that adjustment in the adjustment column, put the date that it's effective, which would be January 1st, and then put in a meaningful purpose. When you're putting in that purpose, you may want to take a look at your policy, because if this is effective January 1st, your use it or lose it, you want to make sure that you're following what your policy states. So when we were reviewing this, we determined that as of January 1st, that employee still had time to take that leave before we made that adjustment in the system. So if we refer back to our biweekly pay schedule and we take a look at that first post date in January, and they have until January 2nd to use that, or the January 2nd post date, which would be the pay period of December 6th through 19th, to take that leave. So we were trying to adjust that leave too early. So this leave in particular would have to be adjusted after the policy states that they lost it. So keep an eye on that if you have a use it or lose it policy of when that date that they lose it actually is. The buy leave option is really great for annual lump sum increases. So say, for example, all of your employees get 24 hours of personal leave effective January 1 for the work calendar year 2026. You can go in and add all of those leaves to this employee, or to all of the employees with personal leave. If you have an accrual-based leave policy, you would have to go in and update each of your employees to update their accrual rates if they're changing. So again, when you're putting in these adjustments, make sure you put in a meaningful purpose. That way, when you get audited for these adjustments, that you know exactly why, and audit knows exactly why these changes were made. Once you have your adjustments, you just click post, and it updates those leave balances. If you are doing a bonus pay or leave payout at the end of the year, please call into UAN support if you're not super comfortable doing those. We do these almost every single day. The first thing we're going to ask you is it pensionable? So you will need to contact either OPERS or OPNF and discuss with them if the payout is pensionable. Most of the time it is not, but sometimes it is. So it's always good to have a discussion with them, because it's very specific based off your employee and how they accrue and how they're getting paid out and everything. Another question that we typically ask is about the higher federal or Ohio tax rates. Sometimes the answer is no, most of the time it's yes, but you may want to do a quick search. I was able to find IRS and Ohio guidelines just with a quick Google search, but most of the time those bonus pays or leave payouts are taxed at the higher federal and Ohio rates. Depending on the answers to this question, it depends on how you set this up in UAN. You don't want to do a leave payout just as a regular earning most of the time. So, feel free to give us a call. We'll discuss, what needs to happen. And if you have to set up a new earning or do anything different than what your normal process is, we will help you with that. I'm going to take a look to see if we have any questions about what we've been hitting here. I threw in some extra question slides for our live presentation, but I'll make sure I keep an eye on those as we're going. Looks like Bob and Alex are doing a good job keeping up on those questions, so we're going to continue on. Since the questions have died down a little bit, we'll answer this one in the questions just to make sure everybody's back and everybody's awake. So if you know where this photo was taken, throw that into the chat. Okay, we've got a lot of questions coming in. This is great. I apologize to our trading staff who are fielding our questions for us. We had a lot of people on the in-person suggest Sandusky as well. I need to look into that if there is anything like this in Sandusky. I want to check it out. But this one is actually the Wilds in Cumberland, Ohio. If you've not been there, it's amazing. You can take an open air safari during the summer and these animals will come right up to the vehicle. And sometimes well, they don't let you touch them, but if you wanted to, you probably could. The Sandusky Wildlife Safari. Okay, I'm going to check that one out because that one sounds like fun. All right, so we're going to move on here and discuss the steps to close fiscal year. So if you're following along in your best practices, we are now on page 3. So you cannot close 2025 until you are physically actually in calendar year 2026. The earliest date you can close is January 1st, but there's absolutely no award for filing first. You have until the end of February to file. So, you know, if you call us on January 1st and like, hey, I just closed, but I have a problem. We hear that a lot. Or actually, we're closed on January 1st. So if you call us on January 2nd and say you closed on January 1st, but something happened, you missed something for 2025, you cannot unclose your data. So, definitely don't get in a hurry to close your data. Now, alternatively, you do have until February 28th to close. You don't want to wait until that date to start your closing process or, really to wait for that date to, continue working on it. You definitely want to be closed or completed by that date. So while you're working on closing your year, you need to complete all of your 2025 transactions. This is another example of where temporary mode comes into handy because even if you are physically in 2026, you can log into 2025 and post transactions or corrections for that year. You want to make sure that all 2025 work is completed in 2025 and all 2026 work is completed in 2026. Don't confuse which year you're posting because it's going to throw off your numbers that you're reporting to audit. As a reminder for December and fourth quarter, don't forget to pay and report to state, school, local, your ODJFS fourth quarter, and your federal 941 fourth quarter. We did have a question earlier. I'm not sure if it was pushed to the group about how do you update your ODJFS rates. That is done when you create that report. So if you received a new rate, just take a look at when you're creating that report and you'll see where to update that. You also want to take a look at your carryover withholdings. You can start that process today and work on that throughout the year because you don't want to carry over any withholdings that should not be carried over. One of my favorite reports, and I usually recommend to fiscal officers that they review this report monthly at minimum because it's a really good one to let you know if you made a mistake or you missed something, is under payroll reports and statements withholding reports. It's the default withholding summary report. Just a reminder that OPRs and OPNF are based off of pay period end date, so you may need to run 2 different reports if you want to look at those numbers separately. This is an example that I pulled from my LGOC slides. That presentation is in March. So if you pull up this report right now and you see unpaid withholdings from January 2025, you have a problem that needs to be addressed. Or you may have a problem. You may have paid those withholdings on the accounting side, or maybe you're a newer fiscal officer and the previous fiscal officer paid withholdings in a different way. But you want to look at those probably right now. Address any of those that are unpaid. What you should expect to see, like say for example, if you ran this report right now, you're probably going to have unpaid withholdings from November that's normal. If you run this report in January, you're going to see unpaid withholdings from December in your fourth quarter. That is what you should expect to see. Anything prior to December or your fourth quarter, when you're trying to close out your year, needs to be addressed, because those are just going to carry over and linger on and become, constant problems for you. So the best time to fix those is now. If you need any assistance with those, again, the UAN support line is more than happy to kind of help you take a look at those, or at least give you some tips and tricks on how to fix these or where to look to see why they exist. So quick note on that report: when you're working in temporary mode, if you're working in 2025, those are going to show as unpaid. For December, you want to stick to your normal schedule. You want to stick to your normal, like I was telling people on Wednesday, if you pay your June withholdings in July, you're going to pay your December withholdings in January. Don't rush those payments. Don't try to squeeze them into 2025, because all that's doing is kind of throwing off your budget, because you want to stick to your normal plan, stick to your normal pay periods, your normal post dates, and your normal withholding payment dates. But you need to know what your reports are going to look like when you do that. So for the carryover withholdings reports, that unpaid report, if you are looking at it in 2025, they're going to show unpaid. If you paid those withholdings in 2026 and you run that report based off of 2026, they'll show paid. But if you run the report for 2025, they're going to show unpaid. So just kind of a heads up that report, while you're in temporary mode, could look different. Don't panic if you have any questions about it. If you're pulling it up and it doesn't look the way you expect it to look, again, give us a call. We can kind of discuss why and how it looks that way. But it all depends on when they are paid. We're going to discuss this portion a lot more later, but with your retirement and your withholdings that have employer share, specifically OPERS, OPNF, Medicare, and Social Security, those hit your reports and your budgets a little differently, because your employee share withholdings are based off of your wage post date. So those are going to show, in the month or year that your wage was posted. Now the employer share portion of that is going to show based off of withholding payment post date. So those are likely going to be separate dates, and when they're carrying over, they're going to look different. Your year-end checklist will break those out, and we're going to look at those in my second section. So we'll kind of go a little bit more in detail on those. And this is just kind of reiterating, your withholdings are going to, your reports for your withholdings are going to depend on when you pay your withholdings and what year you're running your withholding reports in. If you're following along with the best practices, there's a section about clearing unpaid withholdings. If clearing unpaid withholdings is not part of your normal process, you most likely probably don't have to do it. You want to research heavily before you do any withholding clears, because an unpaid withholding clear can make that withholding liability go away forever. So you don't want to withhold money from your employees and not pay the withholding agencies. I feel like every year on the support line, we'll get somebody who kind of misreads this step, and they'll go in and they'll clear all of their withholdings. That is not what this step in the year-end best practices is for, and it's not what you should do. This is more for correcting errors, or if you need to increase or decrease withholding payments, and we're going to go in depth on that soon. So if the unpaid withholding is going to be paid in 2026, don't clear them. As we said, stick to your payment schedule, pay them when you're supposed to pay them. There's no need to clear them or rush them or post them in any other way than what your normal protocol is. And then I'm going to discuss this later of when you should use the unpaid withholding clear. So some examples of when you should use it. Say you are paying your payroll withholdings from the accounting side. So if they will be paid or have been paid in accounting, that's a good time to do the unpaid withholding clear. Clearing the unpaid withholdings does not correct any mistakes. If you accidentally withheld something from an employee all year, you should not clear that out. You should do the proper corrections in working year 2025 and get that money back to your employee. Audit does look at that. They're going to notice if you withheld something and didn't pay the withholding agency. Sometimes those fixes can be kind of complicated, but we can assist you with helping or, with getting that taken care of. But don't use the unpaid withholding clear to correct mistakes. That's not a proper use of it. Another proper use of unpaid withholding clear is if you need to decrease or increase the withholding amount. If you have a credit you need to apply, or maybe you have a fee that you want all in the same payment, you can push that over to the accounting side and adjust that payment as needed. And then again, if that withholding was paid on the accounting side and not through the payroll side. An unpaid withholding clear utility should not ever be used to clear a withholding that was not paid to the withholding agency or paid to, or that was withheld from the employee and not paid to the withholding agency. You do need to correct those through wage adjustments in the proper way. Never clear out an unpaid withholding as an error correction for wages. Okay, I had a question on how to find that unpaid withholdings report. That is under payroll reports and statements, withholding reports, and that's going to be your default report that shows up, the withholding summary, and that withholding summary is your unpaid. If you can toggle that, you can use the filters to kind of filter that around a little bit, but what we're talking about is just that basic unpaid withholding summary report under payroll reports and statements. Okay, so we're going to talk about closing or reducing purchase orders and blanket certificates. This is where we're going to switch. Most of the stuff we've talked about prior to now was done in working year 2026. We're just going to switch over to working year 2025. You definitely want to make sure that the purchase orders, if you do choose to carry any over, that you're carrying them over for the correct amount and that they are, everything's good before closing your year and carrying over those purchase orders. So in working year 2025, you can review your purchase orders under accounting, utilities, purchase order utility. And then you have, you can filter your purchase orders for what you want to see. Typically the best place to start if you're not in the process of keeping your purchase order utility screen clean is to select all of your purchase orders and go with the ones with the zero balance and close those out. Those are ones that have been completely used. You cannot increase the amount. There's really no reason to keep them around. So we'll go ahead and close out of the ones that are the zero balance. That may just be muddying up your list of purchase orders that you want to review. So you'll select the ones with those zero balance and go ahead and close those out. Your close date can be the end of the year or whatever date that you're working on this. This is going to leave your remaining purchase order. So for our test data, you can see what we have remaining. Some of these we want to carry over, some of them we do not. So any of the ones you do not want to carry over, you select them and you close item. Any of the ones that you want to adjust down, we'll go through an example of how to adjust. So we're going to select one of our purchase orders that we want to adjust and click adjust. In the purchase order screen, for this particular vendor, we know that our invoice is going to be $450. Right now, our purchase order is $1,650. Now, we do not have that invoice yet. We're waiting for that. That's going to take us into 2026. As long as we have our year open, no big deal. Even if we close our year, we just want to make sure that we're carrying over only what we need for this purchase order. So in the adjustment screen, you do have to put in a meaningful purpose, your date of the end of the year, and then the amount that you want to adjust the purchase order down. So again, for this example, we want to take this purchase order from $1,650 to $450 for that invoice that we're waiting for. So we'll put in the negative 1,200 and then post this adjustment. If you carry over a purchase order into the following year and close your 2025 and say it's a large purchase order or it's a fund that maybe you don't have a lot of wiggle room for any kind of adjustments. If you close that purchase order in 2026 that you carried over, so when you carried over, that means that you've already closed 2025. If you close that purchase order in 2026, that money cannot be re-encumbered until 2027. I know a lot of entities had to go through this with some of the ARPA money last year with the way that things kind of went with that. And it's not a great process because there is no fix without going through some audit compliance violations and some messy stuff like that. So only carry over what you absolutely need to carry over. And we're going to discuss this again when the checklist, so you can see what it's going to look like. So for this example of that $450, once that invoice is received, say we're in January 2026, we're still in temp mode, we pay this payment in 2026, that reserved balance is going to say $450. That means we have to carry over that $450 because we made that payment in 2026, and that is what we meant to do. That's what we specifically adjusted this purchase order to do. So that reserved amount is amounts that were already used on a payment in 2026. All right, I'm going to pause here for just a second, review some questions, and see if there's anything that we need to talk about. Okay, we had one question that I'll go ahead and address before I send you over to Alex. The question was, if you're cleaning up old payroll checks prior to 2025, is it possible to void and reissue in the in payroll module? Unfortunately, it is not if they are before 2025. You would have to do a fund balance adjustment and issue a check on the accounting side for the net pay since those taxes have already been paid. If you have a 2025 outstanding check that has not been cashed, if they lost the check, you might want to reissue those before the end of 2025 because you can go in there and reissue them for a new 2025 date and hopefully get those cashed and off of your records before you close your year. All right, I'm going to go ahead and send you over to Alex, and he is going to start covering the next section. Lunch is approximately 11:30, and we'll run until approximately 12:45, but we'll give you more specific times once we get there.
All right, thank you, Lauren. Looks like we had one more question pop in real quick. It's if I close out a purchase order that still has a balance, where does that money go in UAN? So if it's a 2025 purchase order and you close that out in 2025, that money just goes back to the appropriations account and you could use it later. It would become unencumbered at that point. It becomes an encumbered amount once you make a purchase order. So if you're in the current year and it's a current purchase order, that money goes back to the appropriations account and you could use it or not. You could always add a new purchase order. If you're talking about a carryover purchase order, like Lauren mentioned before, say it's a 2025 purchase order, you carry it into 26 for whatever reason, and then you close it with a balance. So the catch there, as Lauren said, you can't budget the same dollars for 2 different years. So if it's budgeted in 25 and you carry it into 26, then it cannot be part of your 26 budget. So the money, if you close a purchase order that's a carryover with a balance from 25 in 26, that stays in the fund and it stays in that appropriation account, but you cannot budget it in 26, as Lauren said. It becomes a reserve for encumbrance until 12/31, and you could then budget that money until in 2027. So be very careful with the carryover purchase orders. We go over it again. Only carry over what you need to. But if you're in 2025 and you were to close a purchase order with a balance, that money just goes right back to your budget as unencumbered, and you can encumber it anytime you want. Here. So we're going to go over in this section verifying your 1099 and W-2 data. First, you want to verify your entity tax information. So make sure you have the right information in UAN, and to do so, you want to go to General, Maintenance, and Entity Setup. And when you're in here, you want to check several things. The default is the Entity Information tab. That's where you're going to put the fiscal officer's name. You're going to make sure, so if you're a new fiscal officer that took over this year, where you put the fiscal officer name under Entity Information is what shows up on all your documents and reports in UAN. So you want to make sure that's accurate. You want to make sure the address is accurate, because that's going to show up on your W-2s, 1099s, year-end filings. And very important, you want to make sure your Ohio and federal tax IDs are accurate. They should be. If they were entered prior, those aren't going to change on you, but you just want to double check them, make sure you're okay before you go through the year-end practice and then find out something was wrong there. So just give that a look over. After you check your entity information, we recommend you check your vendor information for 1099s. So while you're under general maintenance, you can now click on vendors and payees. And then we're going to look at our vendors. So when that screen comes up, when you're sorting your vendors, you have off to the right side 2 fields, 1099 required and W-9 needed. So we get a lot of questions on this. So you could have your own policy on when you need W-9s. You could get one for every vendor, or you could refer to your policy on that. But if you have to give them a 1099, then you're going to need their W-9 to get the tax information. Now, the boxes you see on this screen are filters, and those filters are manual inputs that you would have to select under the vendor setup. So we'll get there. Assuming you have set up your vendors and you've checked the box that a W-9 is needed for those vendors ahead of time, say you're a seasoned pro at UAN, you know exactly what you're doing when you're setting up those vendors, then you could use that filter and put W-9 needed, yes, and you would check on that vendor. You'd select them and hit edit, and then you'd see the vendor screen. So once you get their W-9, you would uncheck the W-9 needed box, you'd enter their tax ID or social security number, and then you would check the 1099 required box. That way it shows up on the 1099 required filter. So when you're entering vendor information, these boxes highlighted here in red, the W-9 needed and 1099 required, if you check those, I'll flip back real quick, that's what controls the filters that you're seeing on this screen, 1099 required or W-9 needed. So we recommend you sort through your vendors and make sure you keep that up to date. If you're not, then you could keep those as settings on all, so that way you see all your vendors, and then you just have to sort through more information instead of just cutting right to the thick of it there. So W-9 needed and 1099 required boxes, they kind of work hand in hand. If you have a vendor where you know you're going to do a 1099 for them, check the box for W-9 needed. Once you get that tax information, enter it in the vendor, then check the box for 1099 required, so you have a smooth year end and they're pop right up on your 1099 to-do list. Another thing you want to do is make sure you have, if you're doing a 1099 for a vendor, you want to make sure you have that vendor's address in there. It's not always required, especially if you just pay something online and you don't worry about it. So you might not have any addresses entered for vendors. But if you're doing a 1099 for the vendor, you need to have their address on there, and it's going to be required when you file your 1099s with the government, especially the e-file. or in paper, you're going to need the address on there. So make sure you have all your vendor information. And that's pretty much it for the 1099s. That's straightforward. You want to make sure your vendor information is good. Later, we'll go through how to create those 1099s and how to print, and we'll do the same for W-2s. Now we're going to stick with the verifying the information. So for your W-2s, the real thing you want to make sure you're paying attention to is the employee information. We already checked the entity information when we started, so we know that's good. And the other half of your W-2s is the employee info. So make sure you have your employee's name correct, their address, social security number, and where they were in 2025 for the address. So to do that, we'll go under Payroll, Maintenance, Employees, and we'll click Edit. And you select your employee, and you're going to do Edit Advanced. So back up real quick. You just select that employee under Payroll, Maintenance, Employees. Select them, then you're just going to hit Edit Advanced on the bottom right of your screen. Screen's going to look like this. And I have highlighted the fields we were talking about. So our example here is our fake fiscal officer, Brutus Buckeye, and you've seen his photo pop up in the slides. He's a mix of Brutus Buckeye, Mario, who knows who. We want to make sure that we give you something to laugh at there, but we're not infringing on any copyright either. So on Brutus's profile here, our Edit Employee screen, we want to make sure we have the name correct, the address correct, and social security number correct. It's a good time also to make sure their W-4 is on file and you have that correct. Same with the Ohio IT-4 form. Assuming those tax forms were correct already, for the W-2, you're just going to highlight those 3 items. So again, make sure the name, address, and social security number are accurate for your employees. Next, we'll move to verifying local and school withholding W-2 IDs. So this isn't on the employee setup, this is actually on the withholdings. In work year 2025, you want to make sure you have the proper withholdings with the proper W-2 abbreviations. So to check those, you're going to go under Payroll, Maintenance, and Withholdings. And we're going to look at the withholdings themselves. School district is really easy. It automatically populates the SD, and all you have to do is put in the code. And then for the local taxes, you have to put in the correct local tax information. So we have here Buckeye for Buckeye Village and Little for Little Village. The box caps out, I believe, at 8 characters. So you might have to get a little creative on the local taxes, but you want to make sure it represents the right tax name. So you'd select your withholding there and hit Edit. And we'll double check our school district first. So this is the screen you're first going to see. It's going to tell you the name up top and the district number. You want to make sure you have that correct. And you also have the state income tax base or the earned income only tax base correct for that. Now you may ask yourself, how can I find out that information? We'll get to the finder in a second here. Before we get there, we're going to look at a local tax, and very similar to the school tax, it just says W-2 abbreviation, and that's where you'll put in your 8 characters to describe the local tax. You want to make sure that's accurate. On different screens in UAN, you're going to see the little blue question mark. It's always a good time to click around and find out what they do, and they are often helpful. So this one is going to link you to the finder, which is on the Ohio Department of Taxation website. You'd click on the finder there, and it's going to give you information on local and school taxes. It'll give you the rate, the name, the tax ID number. You could also put in like an employee's address, and it'll tell you what they should be paying that way. So going through this way is very safe for you. Use the finder on Ohio Department of Taxation's website. Sticking with local taxes, we'll touch on RETA and CCA here. So last year we started with the e-filing for RETA and CCA. So we want to make sure that you understand this only applies to you if you use either RETA or CCA for local taxes. UAN does create that e-file, but it's going to require you to do a little extra work on setting up those withholdings. And we'll go through that here. So where you saw the local and school taxes before, we were on this same screen, but we were on the withholding, but we were looking at the details tab. Here, we're drawing your attention to the center tab, EFW2 local taxes. And for RETA and CCA, you're going to have to fill out some information on this tab. Again, with the blue question mark, it's going to give you extra information for that screen. Typically, place code's not required for these. And last year, when we started doing the RETA and CCA, they were kind of thrown in there last minute, and you had to do extra work. If you set up all your withholdings last year to enter in place name, state, tax ID type, administrator, and the tax code, then you're all set. You don't have to make any changes this year unless you've added new taxes that are RETA or CCA, and they haven't been updated yet. So if you took care of all this last year, you're in good shape for this year. If you have RETA and CCA and you didn't do it last year, then you're going to have to update your withholdings with some extra information. By clicking on that blue question mark, it tells you what you have to put in there. For the tax codes, as you see in the bottom left corner, you have to get that from RETA or CCA, depending on who your taxing entity is. So you'd want to give them a call and get that information. Sticking with RETA for a second, the tax code on our screen and UAN down here, it's going to ask you for a 4-digit code. If you call up RETA and ask what is the tax code for this particular district, they're going to give you a 3-digit tax code typically. All you have to do in UAN is put a 0 in front of it. So in this instance, if they give you the code of 111, just put a 0 in and then 111, and UAN will take that. This information is going to be required to create that e-filing for RETA and CCA for your W-2s. So if you have those taxing agencies, you want to make sure you fill these out. Give us a call on UAN support if you need any help. We can walk you through it. For CCA, very similar to RETA, blue question mark is going to give you what you need to fill out there, and you'll have your place name, and you'll have to get the CCA tax code from them. And we have one highlight. CCA does not require a place code, so you could skip that and it should show up grayed out for you in 2026.1. Whereas last year when we first rolled it out in 2025.1, we had you put that in there because it was new for us. So updates to that, a little bit less work for you to fill out. But again, only if you have CCA and RETA do you have to worry about this. If you do have CCA, they also require you to file your school taxes with them. So in addition to doing your local taxes, you'll have to go through all your school tax withholdings. But luckily, you only have to update the place name, and then everything else is going to be filled out for you. Again, click on that blue question mark or contact CCA if you have questions on specific data from them. But by filling out those withholding information, it's going to allow you to create the e-file for your W-2s with them. We want to look at the W-2 report. That's going to help you verify your W-2 information. So to find that, it's under Payroll, Reports and Statements, and then Tax Reports, Federal. And then you would just select from the drop-down menu, the bottom one, the W-2 report. The nice thing about this is it shows you in one page individual breakdowns for your employees and then the total at the bottom. So it's a handy way to look over your W-2 data before you go and print out individual W-2s. Suggest you print that W-2 report. Here's what it's going to look like. It breaks down base wages, what's been withheld, the withholding that was withheld, the type, and the total. It's only going to show what was withheld, not what has been paid so far on that withholding. So you want to make sure you're looking at that correctly. Also, you'll often see people will try to run this report and they'll try to tie it up with what they paid OPRs year to date. Not necessarily going to match because your W-2 is a tax document. Tax documents go based on the post date of the wage. The OPRs filing is based on the pay period of the wage. So if it's a biweekly employee, it's a 2-week pay period, and the pay period dates are what dictate what month OPRs goes into. The other thing with that is typically you might have a pay in, say, early January that has a December ending pay period. Well, you're not going to have that done until January, and you're not going to pay OPRs until January. So those wouldn't show on the W-2 document for this year. They would show on for next year. So that's why your W-2 report isn't going to tie out to your OPRs withholdings and what you've paid for the year, because they work off different dates. tax documents go off of post dates, and retirement, like OPERS and OP&F, they go off pay period dates. So we're up for questions. We'll review here. Give me 1 second.
Okay, can you hear me? All right. So a lot of, not too many questions here, I guess, but if I have a question, if I have multiple addresses for a vendor, how do I mark which address pulls into 1099? Honestly, it will default to one of them. I think the earlier one that you add, or it may even go by alphabetically. You can easily edit that to the one that it should be by editing. Once you add the 1099, I'm not sure which I said before. I think I said 1099. When you edit the 1099, the first thing that you can change is the location, which is going to be the address. So you can switch it over if you have a second address where maybe they changed the previous year, or you can just directly edit it. And you'd want to do that in working year 2025. So, all right, let's see what else we have here. Okay. Okay, I have a question. If you just have Rita, do you need the CCA info in other tax withholdings? No, if you don't pay into CCA, you don't need to enter any CCA information in there. So just, and same thing, if you don't have CCA or Rita, just disregard any of our notes about that. It's not relevant to you because you won't be creating a file for them to upload. All right. Okay, really good question here. If I pay wages in January that were performed, which I'm assuming you posted them in December, how does that impact? OPERS? Okay, so you paid wages with a post date. If you're saying that you paid wages with a post date in January, but the work, it's the real key date for OPERS, the pay period ending date. So if the pay period ending date was, say, December 29th or December 31st, but you're paying them the actual wage January 5th, then that OPERS considers that a contribution for December because of the pay period end date. And it's not due, 30 days after the end of the month. So it will, so you pay it then, it's going to be it's going to UN's going to keep track of that. So you don't have to pay that until you actually pay. So don't pay for December early, I guess, is what I'm saying. You may have some employees that pay periods end and their wages, and it's included. So you got to keep track of all your employees and see when it's good to have like a spreadsheet or spreadsheets like Lauren had there to know when your pay periods your ending dates correspond to your pay dates for each different frequency, and then don't pay OPERS until all those when they earn the money, all those pay periods for December, the wages are paid. So that might not be until mid-January for some people who only pay payroll mid-month and it's for the previous month. So that all depends, but you're going by pay period end date for OPERS, once again, before you actually report to them for that month or pay for that month. All right, so we've got a handful of others here. Let me give us a chance to read through. Okay, is there a report that can be printed that shows all employees and their current addresses? Yes, there's a short one and a long one here. Depends on if you want other information beyond that. So I'll give you that. If you go to payroll reports and statements, and under employee reports, so payroll reports and statements, employee reports, and you show the pick list. There's like 8 reports there. 2 of them there are good. Employee information sheets. That one's kind of designed as a shorter version, and that would be something you could actually hand to the employee and say, hey, is this accurate information, and have them, update that for you. The other one is not so much necessarily designed for employee general information. That's going to show you all the withholdings, all the details you have the employee setup. So that might be too much for your question, but the most likely employee information sheets on the employee reports, that answers the question. Is there any report that shows the address information for all my employees? All right. So that. All right, just want to reiterate what we say about the tax code for RETA. The tax code for if you pay into RETA and you're uploading the file, with most are, then the tax, there are some instances, UN requires a 4-digit code for the tax code in the EFW2 tab for the withholdings. And so if you, sometimes RETA will give you a 3-digit number for that. That's a number you have to get from RETA. They may give you a 4-digit number. They may give you a 3-digit number. If they give you a 3-digit number, UN's requiring a 4-digit number. So the fix for that is simply to insert a 0 in front of. So if it's number 123 that they give you, then it would be 0123, and then that would fulfill the UN requirement for that field. So that's all that's about. All right. And a question, 1099 still sent for those earned over $600? I believe so, but you always want to check the IRS guidelines because I am not a tax expert. All right. Okay, give me a second to read a couple of these left. Okay, so I'm in a question about carrying over purchase order. And I think what they're saying is, well, they encumbered enough, say, and this might be different for a few months. So let's say they open the purchase order at the end of November, or beginning of December, and it's enough money that it would cover December's bill invoices for work done or services done, and January. Well, in that case, no, you would not. You might carry over the enough you need if the invoice for December does not arrive until January. But you would not pay for January expenses, services, or goods purchased in January for that in that month. You would not use a carryover purchase order for that. The key thing is, was the service started or completed, and you're just being invoiced for it in the next year? Okay, so service is done, or we had electricity provided in December, but they don't get the bill until the first week or second week of January. Well, fine, carry over the purchase order in that amount. And that it makes sense because it's part of last year's budget. That was an expense that was encumbered the previous year. But if it's for a new expense in December, then that is not that portion of that. You would adjust off that portion before you in the old year in 2025. So I hope that kind of helps clarify that a little bit. If not, give us a call at UN Support to talk it through the details. Now, there are certain things, if you have like a large contract, multi-year project, building a building, major improvement somewhere, or something like that, that could have to do with, is more tied to, and you may want to discuss it with the auditor on should you keep that purchase order open for a large, capital type project, and what would qualify for that. So could be a little trickier. But for like simple utilities or just expenses that might carry over, that you only want it's only the focus on your services or goods provided in that 2025 if it's just being billed in the next month or a little bit later. Okay, one more, maybe. Let's see. I'm not sure if I understand that question. We may leave that for later, or maybe if Alex has got a better understanding how that was worded. All right, back to Alex or Lauren. Who's taking next? Alex. All right, back to you, Alex.
Thank you, Bob. Much appreciated, sir. So it looks like that extra question that came in, it said they pay their local taxes through Ohio Business Gateway, and they have to send some year-end reports for local cities. Will they be able to e-file with those? So for UAN purposes, we only create a local W-2 for RETA and CCA, and we just started that last year. No other local municipalities are available in UAN to create that local file, but some of those local municipalities may take the state file, or they may take one of those local files. So you could try them if you've done it before, great. I know some actually do take the state of Ohio file, but we don't create custom files because there's just too many taxing districts in Ohio for the municipalities. So if you could do it that way, great. You could try the state file. I would start there. If that doesn't work, then we really don't have an other option for you there. And we'll be going to lunch around 11:30 today, so we're doing pretty good on time. And we'll jump back here. Bob's been a lifesaver answering those questions for us. Really appreciate it. So we'll move on, and we're going to get through some trivia. And first, in my last section, we reviewed what you need to review for that data first. And it was the basic review, things you need in place, like the building blocks for your 1099s and W-2s. You want to make sure the info is correct first, right? So next section, we're going to go over how to add those, create them, and print them and e-file them. So we're going to get there. Just don't worry about it. For this section, we've got some trivia, and it is back to the Art Barns, and there's a bit of a lead on this one. Do we know where this bicentennial barn is located? And it does say Zoar, Ohio on there, but it's right next to Zoar. It's, let's see, on the Town Path Road, and right there. So not too much of a surprise there. Well, the thing I did find surprising was when I looked into it, Zoar means the place of refuge, and it was founded by German immigrants back in 1817, and it is recognized as an island of old world charm in East Central Ohio. So very cool, and that is an older barn. They had the artwork on there celebrating the bicentennial for Ohio and for themselves in 1817 through 2017. So very cool stuff there. Back to work on those W-2s, how to add and print your W-2s. So we went over how to verify your employee information, how to verify your information as the employer. You want to make sure you've posted and distributed all the wages that have a post date in 2025. And this is the part we really want to make sure you understand. The taxes and W-2s are a tax document. All taxes work off of the post date of the wage. Doesn't matter for tax purposes what the pay period is. If the post date is in 2025, it's going to show up on that W-2. If the post date is in 26, but the pay periods are in 25, it's going to show up on the 26 W-2. So post date drives your taxes and tax documents, while OPRS works, OPRS and OP&F, the retirements, they're concerned with the pay period end dates. So that's the big difference there. So it really depends on when you post those wages. Before you do your W-2s, make sure you have all of your 2025 wages posted through December. You want to make sure you've reported all December and fourth quarter taxes, and you want to have reviewed your W-2 report that we popped up before, and verified all the reported taxes agree with that W-2 report. So it's just a good review before you start going and printing the W-2s and drive yourself a little crazy. W-2s and W-3s, you don't have to worry. We recommend you do them in work year 2025, but you can do them before 2025 is closed, and you could add, edit, print them after 2025 is closed. So you could do that under each work year. Either one is fine. You won't have any problems with that. For W-2s, we'll make a note, and we go over it in a little bit when we go through the printing, but the thing to note for W-2s and 1099s, UAN prints a full W-2 for you, so you don't need to buy W-2 forms. If you want to buy those forms, you could buy perforated paper, but plain paper is fine. You can print them on cardstock if you want to be extra fancy, but UAN will print out the full W-2 form for you on whatever paper you put in there. 1099s, those you do have to purchase, and we go over this again later, but 1099s and 1096s, you have to buy those forms. UAN does not print that out. It fills out the boxes for you. So if you put in the paper, it'll fill it out, but it won't print the full form. So you want to make sure you buy those, and you could buy those from any office supply place or online, anything you'd like there. So just a note. Back to the W-2s. For each W-2 that you distribute, every person's going to need a notice per the IRS. It's a standard boilerplate IRS wording, so you could print one notice and make photocopies, or you could print 50 notices for all your employees through UAN. Just depends on which printer ink you want to use up. It doesn't matter, they're not individualized. It's your standard IRS notice for W-2s. So when you're creating and adding those W-2s, you want to make sure you print the notice for them first, and you want to make sure you report years 2025. Then you're going to click on Add after you confirm the years 25. And to note, you can only put in one W-2 per person. So you want to make sure you're not trying to add them again, because it's not going to show. I've run into plenty of people who have added W-2s and they think they left somebody out, and they go to add them and they can't find their name. It's because they were already added. So you can only add one W-2 per person. For the W-2s, you want to make sure you select the paid this year option, as opposed to all employees. Then you're going to click on the blue question mark for more information. And that's going to tell you that the W-2 report and the W-2 shows amounts withheld, but not amounts remitted. So because you've withheld them doesn't mean you've actually paid them yet. So you want to make sure you double check on those things where you are. You don't want to have outstanding taxes, as Lauren brought up before. If you're going through that withholdings report and you see something outstanding throughout the year, you want to make sure you take care of those timely. When adding your W-2s, there are several things that are going to impact the withholdings. So for federal, Ohio, school income, tax wages, they're going to be reduced by any salary reductions, cafeteria plans, or deferred comp. That excludes non-tax earnings, fringe benefit OPERS, and OP&F. So there's a couple things you have to juggle. Your normal traditional payroll, taxes are going to come out. But what could reduce your federal, state, and school taxes? Well, that could be salary reduction, cafeteria plans for your medical, or deferred comp. How do you know if it's a cafeteria plan? You have to check with your medical insurance company. It's specifically stated so, but cafeteria plan pretty much reduces taxes across the board. It's probably the most powerful type of withholding for taxes. So you want to make sure that's correct. You definitely don't want to label something CAF plan that's not. For Medicare, Social Security, and local income taxes, those are only reduced by cafeteria plans. So salary reductions and deferred comp, they'll reduce federal, but not for local. And that also excludes OPERS and OP&F from the Medicare, Social Security, and local taxes. And last, it's normal and correct for OPERS and OP&F amounts reported on W-2 to differ from the totals on the OPERS and OP&F that were filed for the year. We talked about that before too. Typically you withhold in December and you'll pay OPERS the following month, so you'd pay those in January. And also you could have a early January pay period, post-date wage, where the pay period still ends in December of 2025. That would impact OPERS or OP&F, and it would show on next year's W-2 because W-2 is a tax document, and taxes go based on post date. So if you're posting in 26, that would show on your 26 W-2. To add your W-2s, once you've selected paid this year, you select all your employees, check the box above, and hit save. Once you've added your W-2s, you have the option to edit them. You could edit them if necessary, and I suspect this year there's going to be a lot of people editing W-2s. As we talked before, the no tax on overtime has to go in box 14. So this year, that's where you got to do it. It's encouraged. It's not mandatory per the IRS, and there's no penalty if you don't, but it is strongly encouraged. If you've converted to UAN this year and you didn't post conversion wages for the payroll withholding side, then you'd probably have to edit those W-2s because you'd want to produce one W-2 with all the earnings and withholdings for that employee for the whole year. So that would be another reason you'd edit a W-2. You could also have an error in payroll during the year. That's why you'd want to manually change a W-2. So that would be something like you had to do a wage adjustment and you withheld Social Security instead of OPERS or vice versa. And, maybe that wasn't handled correctly. So that would require a manual edit on the W-2. If you're required to add additional information in box 12 or 14 per the IRS or state guidelines, that would be a W-2 edit. So this year it's going to be 14 for the overtime tax. And if you have third-party sick pay, that would be something that you'd have to edit a W-2 and add there too. You don't have third-party sick pay. You would know if you have it. Most people do not. But if you do, that's where you'd want to edit it. And that would be things like Medicare and withholdings that are getting paid by a third party that you'd have to add to the employee's W-2. So moving on, how to add and edit multiple W-2s, box 12 or 14 at one time. When you have the option to add W-2s and W-3s on that page we're just looking at, right next to the add button is the W-2 editor. So if you were to add items or edit items, you could do it for all the W-2s at one time. So potentially you could edit the box 14 for everyone at once, but you probably don't get overtime on all your employees. It would just be select employees and typically your biweekly employees. So I doubt you'd have to do it for everybody because you're not going to do that for trustees and salary people. So typically what you're going to do is what we're showing here, and it's how to edit single employees. You'd select your employee from that W-2 list, and then you would just click them and hit edit. You want to make sure you're overriding the right areas, so pay attention when you're in here. And this is what the screen is going to look like. Edit single W-2s. Most likely, this is how you're going to have to edit everything. If you see, when you log in here, things are grayed out at first, but we have circled all those override fields. So all you have to do to edit one of these fields is first click on the override section, and then that section will no longer be grayed out. It'll light up for you, it'll turn white, and then you could enter in your information. Up top is where you see we have the tabs for federal, state in box 12, and also local and box 14. So in our example, you'd want to click on box 14, and you'd want to just select the override, and you could put anything you need in that override field. So here's box 14 we have here selected. You just select the override that you need, and you can type in the, we have an example in a few slides, but right here is where you'd put in the qualified overtime that they're going to get. So it wouldn't be the whole overtime amount, as we said before. It would just be that 0.5 of the 1.5, roughly 33%. So you want to make sure you calculate that out. And that would be the qualified amount per the IRS you're going to add to box 14. Again, we'll go over the no tax on overtime because we really want you to understand that one. Refer to the IRS site for information. You could refer your employees there because they might think it's, hey, there should be no tax at all on my overtime. And you have to explain to them that your base pay in that overtime 1.5 is still taxed, but it's the overtime portion that is not just the 0.5. That is what they can get the taxes back on for federal. This is what that would look like. So when you'd select box 14, you'd click your override field. You're going to copy over your OPERS amount from the box 14 calculator to the bottom left, because that doesn't change. And then you're going to add in the qualified overtime and the amount you're going to put in there. So the maximum amount, again, for individuals would be the $12,500, and double that for somebody who files joint. We're at a question section here, so let's take a look at the questions. Give me 1 second and we'll review, and then if there's no questions, we'll move on to the trivia, and we're coming up on the lunch break soon. So let me review those questions for a minute. Looks like the only question I see out there is where to find the UAN best practices. If you came in late or you missed that before, it's going to be on the UAN website. So you're going to go to uanlink.ohioauditor.gov, and right on the top where the picture is, it's training materials, and you're just going to click on that, and that's going to give you the best practices that we're going through now. Also, you're going to get the best practices and year-end procedures next week once we release that 26.1 software. It's going to be right on your computer for you. Once you get that, you'll have everything you need to go through year-end. But if you want to follow along today with the best practices, you're going to want to first go to UAN link and grab it right off the home page under training materials. We also pushed out the link to the group chat for that, so it'll take you there. We do have some questions that came in, so we're going to turn it over to Bob for a few minutes, and then we'll probably pause right after the questions for our 11:30 lunch. Bob, take it away, sir. Thank you.
All righty, well, I'll take a few here. Quite a few came in just all at once, so let's see here. All right, so one question is, will qualified overtime, does it start until 2026? No, actually, the overtime, no tax and overtime possibility of you reporting that will start with the reporting year of 2025, which of course you do complete in 2026. I mean, unless you're like right on top of it and doing W-2s on, near the end of December, but it's still for the reporting year of whether you're camping out on December 31st and producing your W-2s, or whether you are doing this in January sometime, creating your W-2s in the calendar year 2026. They're still for 2025. So that was a good question. Now, he did mention that we suspect they're going to require it, have some requirements and more clarification, hopefully, for 2026. But right now, for 2025, it is encouraged by the IRS. Okay. Let's see here. Please explain box 14. You stated qualified overtime. Kind of run through this. I had a question about box 14. It stated qualified overtime of $12,500. That was an example. The key point is that UAN doesn't automatically calculate this for you, the 0.5. So let's say someone's total, to even simplify it more, someone's total overtime pay was, well, I won't go through the calculations all over again. Probably be harder to follow me verbally, but the point is that in dollar amounts, you're going to see on that export report, wage earning export report, the overtime dollar amount, and assuming that it's set up as 1.5 times the rate, the base is not going to go into box 14. In other words, if it's $1 and then $1.50, right? I mean, to be really simple, that it's going to be the 50-cent portion of every, that would go into there, not the dollar or whatever the case may be, 1,500. Then only the 500 would go into the box 14. That's probably better, more realistic thing. All right. A few others, probably got too many to go over before lunch here. Got only 3 minutes left. Man, more overtime here. So will a qualified overtime be detailed in the UAN end of year detailed instructions? No, because really not part of your, the how to edit box 14 is in the year-end procedures, box 12 and box 14. 12 is unrelated to this, but that's, how to make edits to W-2, certainly gone over, but not specifically this. In the overview, basically all of what Alex and I have covered and discussed is going to be in the overview to version 2026.1, and I'm not sure what page that's on, but it's in there. When you get that, just make sure you go ahead and print out or view the overview for the version, and it'll explain everything we've talked about. Okay, a lot of the repeat questions, there's only so much we can go over in this day about that one subject, so I will not hit those any longer. Do we mail the 1099 96 forms? Okay, do I mail the 1099 and 1096 forms? Well, for you in particular, the person asked that question, I don't know. The vast majority. Now, if you're talking about sending them to your vendors, yes. If we're talking when we say electronic filing, we're talking about filing that to the IRS, the 1099s and 1096 data to the IRS and to Ohio Department of Taxation. So the vast majority of our customers will be required to file those. So more information on that threshold is in the year-end procedures and in the overview of version 2026.1. It's not just 1099s that you want to count, but also W-2s, and if you have to 1095, if you meet that threshold for filing online. But yes, mailing them to the proper vendors that are getting 1099s, yes, you'd mail those. All right. We're about to go to lunch. Let's see if I can get a short one here. Nope, there's nothing I can. I'm at the limit.
The America 250 barn is located in Fremont. No idea. A lot of no idea. Ashland, that was a good one. This particular one is in Fremont in Sandusky County, and it is part of the historical barn mural trail. Very nice stuff out there all across the state. Young's Dairy Farm, fantastic place to go if you're down in Yellow Springs. Love them. All right, so we will move on into printing our W-2. So as I said before, UAN prints the full W-2. Before we went through confirming your information, the employee's information, adding the W-2s, how to edit those W-2s, and now we'll move on to printing them. So you don't need to buy any special forms for the W-2s. You can add, edit, or print those W-2s in work year 25 or 26. Either one's fine. And you just want to make sure you're doing your 25 W-2s. So you can use any type of paper you'd like. Typically, a lot of people just use the regular printer paper, but you could buy the perforated paper where it tears on the left side in 2 or 4 parts on the right. We recommend the 4-part, and we'll go over why once we get deeper in here. But plain paper is fine as well. You could do the pre-perforated if you'd like. You do not need to buy a special form for your W-2s. Before printing your W-2s, as we said before, you got to make sure you print out that notice required by the IRS for all employees. And again, there's your print notice form right there, right under the Add W-2 section. Once you are ready to print, you want to select all your employees, and then you can check the Print W-2 box in the bottom right of your screen there. And then you're going to get some options. So here we have the employer side if you're printing for your records on the left, or if you're printing for your paper submissions, if you're submitting W-2s via paper. And on the right side, you have the employee options. For the employer side, Copy A is going to be required when filing for federal with Social Security, and you're going to need the W-2s and W-3 for them. You want to make sure you're following the e-filing rules. Like I said, it's 10 combined federal forms. So if you have 5 W-2s and 5 1099s, then you have to add them together, and you'd have to e-file because you'd have a total of 10. Looks like we have some folks in the chat who are currently saying their slides aren't showing and they're hearing no sound. I would recommend refreshing your browser. Probably just got stuck on break. Our training staff will help you with those questions, but typically refreshing your browser will help there. And so you can hit that refresh button, the little circle thing, or hit Control F5 and that will refresh for you also. So printing the employer slide, like I said, copy A is for your federal copy if you're filing by mail. Copy D is for your employer records. So you want to print those out and keep them for yourself in accordance with your record retention. You could always get a request for them later, or you could have an employee who needs it. So you want to make sure you keep those for your records. And copy 1 is your locals. So you have your 2-part or your 4-part forms. The 4-part will include more employees, where the 2-part will just do the 2. For electronic filing, your employer copies, there's no need to print the copy A or state copy 1 if you're filing electronically. You just want to print for your records, and that would be the copy D, so you still have those, but you wouldn't have to print the A or 1 for federal and state if you're going to e-file. For the employee side on W-2s, you have your 2-part or your 4-part. Like I said before, we recommend the 4-part because it'll print all 4 for one employee. You don't have to sort or anything like that. If you go with the 2-part, it'll print 2 employees per page, and then you'd have to cut, sort, and distribute those. The 4-part is 1 employee per page, so it's much easier for you to select the employee 4-part, print that out, just hand the 1 sheet to the employee, and you're all set. Make sure you give them that notice when you do that as well. For your W-3, that is all the information on the W-2s. So you'd select all the employees, that way you capture all the W-2s, and hit the Print W-3 button. You're only going to do this if you're filing by mail. So if you're filing your W-2s by mail, federal government's going to want the W-2s and W-3. If you're e-filing, you could skip this step. So if you are filing by mail, you're going to print that W-3 after selecting all your employees. And this is the box you're going to get. In the top left, you have to know the kind of employer you are. UAN can't help you with that. So you have to see either how you filed last year or you already know. And in the bottom right, you're going to have the section where you can put in third-party sick pay. So if you had to edit those W-2s to add third-party sick pay, you want to make sure that's correct for you here. To create an e-file, which is going to be most folks who are doing the e-filing now for federal government or state, you're going to select all your employees and hit the File button. And this screen should be fairly familiar. In the bottom right in the center is File Type. File type is the most important thing you want to pay attention to very first on this screen, because we get a lot of calls where people are trying to file their e-file with, say, the state, and it's rejecting it for one reason or another. Typically, they're just trying to file the federal e-file with the state, whereas you would hit that file type dropdown, you'd select the state and school file, and that is what you would submit to the state. Also, there's the local for RETA and CCA, the e-filing is there. So you want to make sure the file type you're on, federal for federal, state and schools for state, and then the local for RETA or CCA, it'll ask you which one you're doing there. Again, in the top left corner, you have the kind of employer you are, so you have to select that. And when you're filing for federal, the extra step you have to take is that BSO number. So you have to put in your BSO number that you get from Social Security, and that will allow you to e-file successfully with the federal. In the bottom left, you want to make sure you have the fiscal officer name is updated and correct, and you want to fill out the contact information as well. All you have to do is make sure those types are okay and you're on the correct file type, and you just hit OK, and it saves down the e-file for you in the C drive under UAN e-files folder, and you'd upload that to SSA. For Ohio schools, Basically the same setup. You just want to select the file type as Ohio schools, and you notice in the top left, BSO number is no longer required because that's only required for your federal forms e-file. So you don't need anything like that for the Ohio form. So you would just select Ohio and upload that to the Ohio ID or Ohio Business Gateway. Once you select your type, you just hit OK, and that saves the e-file for you. And that e-file for the state, you would just upload to the Ohio Business Gateway or Ohio ID. And there's the rename, just to remind you, it happened about a year or two ago. So we're going to call Ohio ID, Ohio Business Gateway, back and forth, but it's the same site. RETA and CCA, as we said before, that's the last file type options for you. And those are the only e-files that we make for municipals. So if you have a city that wants an e-file, you could try the state or RETA or CCA and send that. See if they take it, great. If they do, if they don't, these are the only ones we create, so we can't do anything else for you on the e-file format. All you have to do is select your filer, either RETA or CCA, and hit OK. And it's the same process. It saves down to the e-files folder, and you would submit that to the correct website, either CCA or RETA. Deadlines to keep in mind. You want the January 31st for those W-2s to be in the mail and file with Social Security. You want to check your state and local guidelines for those deadlines on the W-2s. You want to take care of your filing by paper. You want to make sure you take care of that W-2 transmittal form. And UAN does not produce a state or local tax transmittal form. So you have to fill those out if you're filing by paper. If you're e-filing, all you do is create that e-file we just went over and upload it. That takes care of all your information there. Additional reporting for tax withholdings. We'll go over these reports too. They're going to help you out. You want to go to Payroll, Reports and Statements, and then your tax reports. And here you'd want to select the Ohio tax report to start first. That's going to be your reconciliation, what you have to do with your Ohio tax withholdings. So you'd select the year for 2025 and print that out. And use the UAN form to complete the tax form online. Same thing for local taxes. So under the tax reports there, we also have the school and local. So you'd select your local taxes, make sure you select the correct year, and use that for your reconciliation on your local tax report. And UAN doesn't produce the form, but you can use the report to fill out the form for your local taxes. And we're at a question slide. So let's see what kind of questions are out there. We're still getting a few over lunch about the taxes. So for the overtime, big theme there is how do I take care of overtime that is holiday pay at a rate of 2.0 or 2.5. We're going to have to refer you to the IRS for that one because we don't have any more guidance. On the IRS example, it was just 1.5. We're not tax advisors, but I did want to get out there the whole no tax on overtime thing. I know you're definitely going to have employees who believe there will be no tax on their overtime, and you're going to have to explain that, the difference of what's qualified, what's your base wage, what's the overtime premium. So that 0.5 of the 1.5 is the overtime premium. Again, in the box 14, you're putting just the premium in there, so just the 0.5. So if they made $10,000 a year in total overtime, it would be about 33% of that, and that's what would go in that box. Once you calculate it, to calculate it, you have different reports in UAN you could use. Again, you could go under payroll, reports and statements, and wage reports. And while you're under wage reports, you have two good options here. You have the wages and overtime reports, and you also have the wage earnings export. If you do the wage and overtime reports, that's going to give you your base wage total and your overtime total. Depending on how your employees are set up, if they're all set up correctly, then you have your normal earning, and then you fill out the overtime portion and put in the overtime rate. I have seen plenty of entities that, and this way works too, there's two ways to do things, but it makes reporting a little messier. If you took an hourly wage and you just called it overtime and you increase that rate to the 1.5, and that's what you pay, that's not going to show up as overtime correctly. So to capture that one, you're definitely going to want to go under wage earnings export, because that is going to show you all the earnings that they're making and the rate and how much. So that'll drop everything into Excel for you and give you a good chart on what you have to do there. The other thing you could do is, if your earnings are set up correctly and you just applied the overtime and the 1.5, then you want to run that wage and overtime summary, and that will give you your base and overtime totals. From there, you're going to get about a third, or the 0.5, and that's going to be the overtime premium you'll put in box 14. We've gone over that a bunch, so if you have more questions, I'd refer you to the IRS website or a tax advisor. And like I said, if you have any detailed questions on those, like what about 2 times pay for holidays and shift differentials, things like that, that would all have to go to a tax advisor or the IRS also, because the IRS only gave the one clear example of the overtime rate being the 1.5. Okay, let's check out some questions here. If you only have 2 W-2s, can you still file by mail with the state? I would confirm with the Department of Taxation on that one. I believe so, but I've also seen information where they say you need to e-file them all. So I would double check with that one. They were filing the federal guidelines up until, I think, last year, where there was about a limit of 10. And then I believe they dropped it down. They want everybody to e-file. So you might have to e-file, so just double check with the state on that one. Confirm box 14 only shows what the 0.5 amount is. Yeah, so on box 14, when you're doing that overtime, it's only going to be the 0.5 that you put in that box. So if your employee, when they're working 1 hour of overtime, if they get paid $30, in box 14, you would just list $10 there. It's a manual edit. You'll have to edit box 14, like we went over before. You'll have to override that box, and that's where, if they worked 1 hour of overtime and for that hour they were paid $30, $10 is what you would put as the overtime premium in box 14. Now you got to extrapolate that through the year, but that'll take care of that one for you. Let's see. How to upload to Social Security. We don't have a screen on that one, so I can only walk you through. We're UAN support. I can only walk you through how to use the UAN software. So we take you up to the point where you create the e-file, but we can't walk you through how to upload your information to Social Security and how to get the BSO number and things like that. So UAN support can only support the UAN software. And let's see. We had a question, and it was, UAN has the ability to print all the year-end documents we need, and then we need to file the forms with each entity, or will UAN e-file directly to those entities? You want to think of UAN as strictly bookkeeping software. So in the basic sense, UAN is logging your transactions. So if we were paper books, they're not going to go to the bank for you. It's just bookkeeping software, so UAN doesn't do anything automatically for you. So you want to be sure you understand that fully. What you could do, if you're e-filing, UAN will create the e-file based on the records you put into UAN. So it'll create W-2s, aggregate that information, also give you a W-3, and that's what you'd send off Social Security. But when you're taking care of UAN's information and going through the year-end process, it's on you to file that information with the correct jurisdiction. So you want to make sure you're filing these things. UAN will create the file, then you have to upload it to the taxing agencies. All right, so let's go back. That's good for questions. We'll pick up questions again in a bit. And for now, we'll keep going here. We've got one more trivia slide here. We're back to Ohio Art Barns, and these are the Lemoyne Stars Barn. It is part of the Clothesline of Quilts Barn Trail. Very nice stars here. Does anybody know where this is? All right, so the clothesline of quilts and the Lemoyne Stars Barn in particular is located off State Route 32 in the village of Peebles in Adams County. And the Lemoyne Star in particular is a traditional quilting pattern, and it's an 8-pointed star made of spinning diamonds, so slightly different than a normal star. Very rich history in Ohio. Moving to printing your 1099s. To print your 1099s, different than the W-2. 1099s, you need those 1099 forms. So you have to purchase the form somewhere, and UAN will fill out the information in the boxes. We'll also go over the IRS has okayed several different vendors to print 1099 forms, and there's slight variations within those. So sometimes boxes are shifted a little left, sometimes a little right. So you can play with those forms to make sure they're printing correctly out of UAN, and we'll walk through how to do that in a little bit. So going over 1099s at the base level, 1099s changed a few years back. They took off. They used to have every year on there. You'd have to get a new form every year. They just put in the 20, and they removed the back 2 digits of the year. So that way, that number now prints on the form. So you could buy a bunch of these forms and have them for a couple of years. So that part doesn't matter, but you have to purchase a form. They used to also give out forms at federal offices or local libraries, and a lot of times those were older forms, and they might have carbon copies, or they might have the printer with holes on the sides. You can't have any of those. So you have to make sure they're modern printer forms, just regular paper that go in your printer, and it's the 1099 form. You can get these from any of the big box office supply stores or online. A lot of 1099 and 1096 forms are out there to purchase, but you have to make sure you purchase your 1099 and 1096 forms that are compatible with the laser printer, which is almost any modern form you can buy. So to run your 1099s and 1096s, you're going to go to General, Reports and Statements. You're going to click on Year End, and then you're going to choose either 1099 Miscellaneous or 1099 NEC. We can't tell you which one to use, so we would refer you to the IRS website, but most people have switched to the 1099 NEC per the IRS. Miscellaneous still has a purpose, so you want to go on there and check that out, but the vast majority of people are using the NEC form. So you select your 1099, whichever type you're doing. They'll work the same way, either NEC or Miscellaneous from this point, and you'll hit Next. In our example, we have the NEC. And you're going to select the year of 2025 and hit Add. And here we have some more choices. So before we had the 1099 required box. I showed you how to edit that on the vendor setup information. So if you have the 1099 required box checked, they'll show up here. Or you could click all vendors for this year, and that would be your filter. We also had the question before of what's the amount, and it's still $600. So if you pay the vendor $600 or more, you have to make sure you're getting the 1099 for that one. So once you make the selection, again, it's pulled from the vendor screen, and it's the 1099 information box. If that box is checked, it'll show up on that report for you. So going back, we have 1099 required because we've filtered our vendors correctly when we set them up. And then our payment total, we're going for at least $600. If you converted to UAN this year, and you have some payments to a vendor that are on the old system, you're going to have to manually add those together to make sure you hit that $600 threshold, because UAN's not going to know what you paid prior to the UAN conversion to a particular vendor. So that would be one reason you'd have to go through your old system and compare what you have in UAN. Once you are ready to print your 1099s, you'll select those 1099s and click Save and Close. And to edit the 1099, very similar to the W-2, we've added them here, and they're basically in a batch, so we're ready to produce 1099s. All you have to do is click one if you need to edit it, and click the Edit button on the bottom. Very similar to the W-2, you can click one of the override boxes and type in the new name or new amount. So once you click the override, you're then able to type in that field. It's no longer grayed out for you. Once you're done with that, you'd hit Save and Close. We recommend you test print your 1099s because the forms, like I said before, various vendors have been approved by the IRS to print those, but they could be minor differences in those forms. UAN's printing works for the vast majority of them, but we'd want you to do a test print. So on plain paper, you'd want to select your 3 vendors at a time because you're printing 3 1099s at a time and test the alignment. So print that out on a plain piece of paper, select your 3, hit print 1099, let that come out on plain paper, and then you're going to get your 1099 form. That is the one you purchased, and just hold it up to the light there and make sure they align correctly. If they align correctly, great. You put those forms in and print out your 1099s. If they don't, you can change the alignment of that form, and to do so, you'd go to General, Maintenance, Entity Setup, and Forms, and we'll have a little description in a second, but that's the path you want to go to, and then you would adjust the 1099 form. 1096s are going to work the same way, so we would want you to do a test print on that, and 1096s, you would select all the 1099s instead of just 3, select them all, and then you're going to click on print the 1096. Again, this is going to be on plain paper. You're going to hold that up to the printer and see how those boxes line up with the form you purchased. If that doesn't line up, it's the same path, General Maintenance, Entity Setup, Forms, and that's where you can edit how you align those forms. So you can move the boxes around, left, right, up, down, however you need to make it work on the form you purchased. Then I would recommend doing another test print and seeing how that goes. Again, it's under General Maintenance, Entity Setup. Once Entity Setup opens, you're going to click on the forms there on the left, on the bottom, and the screen's going to look like this. And you have 1099 and 1096 layouts. The default is the standard layout. That's where it's printing now. You'd want to click on Use Custom Layout, and that's where you would move the boxes around, put in information you need there. Then you're going to click on the Design button. So it says Design 1099 Miscellaneous, 1099 NEC, or 1096. And that would take you into the Design Editor. We have a video on our website for the Design Editor on how to move those boxes around and take care of that layout. And that's under uanlink.ohioauditor.gov. And you want to go to Training and then Year End. And it's the custom design layout on there. So it's a little video, it's about 2 minutes, and it walks you through how to take care of that. On who gets a 1099, we would refer you to the IRS guidance, so that way you know. Like I said, the deadline is the dollar amount, rather, the threshold $600, but you want to go refer to the IRS guidelines on who gets a 1099, as UAN does not give tax advice. So we can walk you through how the software works for them, but we can't tell you what you need to do there. 1099, 1096, the deadline for mail is January 31st. So you want to make sure you take care of that with the IRS before then. The federal e-file threshold, again, is 10 or more forms. So that's going to be W-2s and 1099s combined. For the W-2s, the e-file, again, you need the BSO number. For the 1099s, you're going to file that with the IRS's FIRE system, and you need a TCC number. That's both for NEC or miscellaneous. All those 1099s, if you file those, they would be in the IRS FIRE system to e-file with UAN. If you have a TCC number for the IRS system, you just have to type them in manually because UAN's e-file only goes to the FIRE system. And then 1095s, 1094s, if you have those for the insurance, that's the Obamacare thing, that you're going to file with the IRS. You need a TCC number for their AIR system. So we'd refer you to the IRS for all the guidance on those forms. To create an e-file for 1099s and 1096s, it's going to work very similar to the W-2s. So on the same screen, we're on that screen where we added our 1099s and we printed 1099s before and printed the 1096. If you're going to e-file, you'd select them all and you just click the File button. Now, last year, the state of Ohio wanted you to e-file. If you did e-file with the state, they wanted 1099s for the first time. It wasn't mandatory, so some people sent them, some people didn't. One website said you did have to send them mandatory, and then if you called, the state said you don't have to. So there was some confusion on there. I would only be able to recommend you, similar to with the federal, recommend you to call the Department of Taxation to see if you have to file those 1099s with the state. But this year, UAN does have a state e-file. So when you go into your W-2s, you have that file type where you select federal, state, or local. And on the 1099s now, UAN is going to have a file type, and it's going to be federal or state. So it does seem like the state is moving towards requiring you to e-file all those with the state, but you want to make sure you cover yourself and contact them to be sure before you don't file them, and then you get in some kind of trouble with that. So make sure you take care of that. You'd select all your 1099s, just hit the file button, and just like the W-2s, it will save down the file for you. UAN takes you to that point. It is up to you to take that file and file it correctly with the federal government, either with the IRS or on the state level through the gateway. So make sure you take care of that too. And let's review some questions here. All right, Bob has found a couple questions here in the inbox. He's been answering diligently along the way, and we knocked a few out during lunch. We've got a couple he'll go over now, so give me 1 second. I'll bring Bob on.
All right, then. So just another question about the transmitter control codes. It was a good question. Asked, does UN retain, if you're a new fiscal officer mid-year, let's say 2025, how do you, if a transmitter control code was used last year, in January of this year, I guess, does UN retain that number? And the answer is no. It's just there's only one form when you're creating the file. It'll ask you for the TC number, and that number isn't retained when you go to create it this year, when you're filing in 26 for 2025. So that is something you'll have to find in your records. Check on the IRS website, see if the one's been established. Now, I mean, when you submitted it, there should have been some kind of confirmation, which I believe you would have the record of that code, but it's not going to be something that I'm aware of that would be retained in the software. TCC codes, another one is if the number is, if a different clerk submitted it, is it by fiscal officer or clerk, or is it by the government? And to our knowledge, the TCC code was the 1099, 1095 for the air system. That is entity specific. So if they used one last year for the entity, but it happened to be a new fiscal officer going in to submit this year, you should use the same TCC number. If you're using the same system, like the fire system or the IRS system, it's going to be by entity, not by a particular fiscal officer. That might be different for W-2s in the BSO code. I am not sure about that. You can check with Social Security Administration. Okay. Let's see. I do not know the exact phone number you would contact the IRS off the top of my head. That's question came in. What's that? Oh, there is. I might have muted myself. Okay. That someone mentioned. Okay, that's good. I don't mention in the chat that if you go to the IRS website, there should be a phone number where you can check on the TCC number. I know there's if you follow our link for the fire system, you'll find steps to establish the TCC number. Maybe you can also find it there. All right, I guess let's see. Lauren, you want to push that out to everyone, that number? So, all right, and let's see what else we got here. Some of these. I think Alexander already answered this one. Do I have to file 1099 with the federal and state? With the state, you can look at their yourselves. What my understanding is that if you make your state payments electronically, then that is something you have to file. I mean, the 1099 is an IRS form, but the Ohio wants you to submit that to them some way, and this would be in the format that they need. You would submit that to Ohio through the Ohio Tax ID system that they have. So, yeah, most of our customers probably are we can't say for sure, but many of you will have to submit electronically. All right, well, we'll leave whatever else. Oh, how do I find out our BSO number? You want to contact the Social Security Administration. That's how that is established. There is also in the overview, the section on this, the 2026.1, which comes out next week. You can get that and print that out. There's a link in there to the Social Security Administration's website that talks about this and how to inquire with them. All right, back to you.
Thank you, Bob. Appreciate that. Keep the questions coming, folks. Doing great there. I've got one more trivia slide before I turn it over to Lauren. So we've got the trivia, and back to Ohio's art barns. Does anyone know where the Warren G. Harding Barn is located? He was the 29th President of the United States, and he passed while in office. At the time of his death, he was one of the most popular presidents. So one of Ohio's, Warren G. Harding Barn. It is located on Ohio 95 in Caledonia in Marion County. And it's got a famous quote I quite like. It's, "I have no trouble with my enemies. I can take care of my enemies in a fight, but my friends, my damned friends, they're the ones who keep me up walking the floors at night." I would also apply that to my children. So friends and children are the ones that drive you crazy at night. The enemies, you can take care of them yourself. I will now turn it over to Lauren, and she's going to walk you through the year-end checklist. Lauren, all yours.
So we're going to jump into the year-end checklist. The checklist is what you go through to close your year. That is found under General, Maintenance, Year-End Checklist. If it's your first time opening it up, you'll want to click Current Year. If you have opened it up and saved it and you're coming back to work on it, it's going to be in that list. This list will also tell you your filing status. So if you're a regulatory filer, it's going to show you here. You'll need that information for later. Your year-end checklist looks like this. You're going to start with 3 green check boxes. That tells you you're on 2026.1, you're in December of 2025, and you have temporary mode open. All of these things are required to open your checklist, so those are kind of like free check marks for you. But to review here, the green check mark means complete, red X incomplete. The blue question mark, I think Alex has had a few in his slides. They're really helpful tips if you are stuck on a step. And then you have a few slides with the caution slide. We're going to explain why it's caution and why it's important. You're going to find that on steps 4G and 4H. You're going to have the red flag until you have your minimum requirements submitted. And then once you have all the minimum requirements into UAN, you'll get the green flag, which means that you can close your year. Just a reminder, UAN, there's some extra things that you may need to put in there for your entity. We'll kind of touch base on a few of those, but that green flag would be that you have your minimum required. Item 4 on your checklist is that your year-end checklist is complete. So that the items 4A through 4H on the left-hand side, that means you have a green check on all of those. When you have that green check on those, this item will turn green. Item 5 is your bank reconciliation. That must be done and posted. We're going to talk about your bank reconciliation quite a bit, but important note, it has to be as of 12/31/2025. You cannot close your year if your bank reconciliation is not dated 12/31/2025. If you start and complete your bank rec 1230, 1229, you will have to delete that bank rec and start over. So make sure when you start it the first time, it's that 1231, 2025. We recommend that you work on your bank reconciliation when it comes time, but don't post that until it comes, that step is recommended in the best practices. So you'll want to chip away at that and then close it once you get to that step as you're following along. Any outstanding receipt payments or fund balance adjustments will automatically clear on December 31st. You're going to get a message when you open your December bank reconciliation that you have outstanding adjustments. So if they will not clear, you need to do some research on, like, do they need corrected? Do they need reversed? You know, why are they there in the first place? And make sure that you have those corrected so you're not bringing them over, or you're not like, you don't want to use like an other adjusting factor to clear those, because that's only going to make you off on your January bank reconciliation. So you can review your primary adjustments tab and see what's there, why it's there, and kind of do some research when you open your December bank reconciliation. If you do not have any adjustments, obviously, you know, no issues there. This step will not apply. So your year-end checklist consists of 4A through 4H. We're going to go through each one of these. 4A is your batch transactions. Any receipts, payments, purchase orders, wages, or withholding payments in batch must be posted or deleted before you can close your year. If you do not use EFT, you'll have no action here. If you file upload with EFT, you should have a green check mark here once your wages are posted. If you manually upload EFT, so if you enter in manual wage or net wages on your bank's website and do not create the corresponding file, you may have to go through and create those files. You don't do anything with them. The UAN considers those as batched if you have not created the file and just deleted it. If you have any questions about this, if you are a manual EFT uploader, please let us know. We'll discuss that in more detail for any of those entities. If you have any outstanding withholding adjustments, these are usually a result of a wage adjustment that hasn't, if this withholding adjustment hasn't been applied, you can't carry that over to the new year, so you need to address that in 2025. There is a report that you can view to see if you have any outstanding withholding adjustments. That's under Payroll, Reports and Statements, Withholding Reports. And in the drop-down, you'll select Withholding Adjustments Unpaid. You'll want to review that report and see if there's anything that you need to take care of prior to closing 2025. 4B is your AFR demographics and debt. The top section of 4B is how you submit your annual financial reports. We recommend that you file them through UAN, and especially if you're regulatory. If you want to file them online, especially for OCBOA clients, you will need a opt-out code from the Hinkle system. So you'll want to reach out to the Hinkle system and talk to them to see if you will need that opt-out code. But again, if you are a regulatory filer, which I think 98% of you are, you'll want to submit through UAN. Another thing that we recommend is that you include your additional reports. With this UAN generated include additional reports option, this is going to create a lot of reports that audit requires when they start your audit, and it has everything all nice and bundled, so when your audit starts, they're not coming to you and asking you for additional reports. This is a system message just to kind of remind you of why this setting is there. You know, and again, it's just to kind of save you some time and effort, and it generates those reports for audit for you, so you don't have to do that come audit time. The demographic or the debt part of 4B, the bottom section, You're going to have two calculated numbers here. These are not editable. These will calculate based off of into your data. You'll have to enter in the population from your last census, unless you're a library. If you're a library, it'll be the number of patrons. Next two sections are not required, but there may be information that you need to put in here for your entity. For inside or outside millage, you might need to contact your county auditor to see if you have information to put in here. And then your bottom is any debt that you have, you'll need to enter in here. 4C is your annual financial report filing type. Again, we've kind of already hit base on this. OCBOA is very uncommon. I think we have 30 of our 2,200 entities that file OCBOA. Most of you are going to file regulatory. So just a reminder, if you are an OCBOA filer, you do need to contact the Hinkle system for that opt-out code. Your deadline to file is not different than any other UAN clients. You still have the same deadline. That doesn't buy you more time to file that way. It's just a different type of filing. Regulatory is the most popular. When you file regulatory, we're going to talk about fund mapping here in just a little bit. So I'm going to skip that section for just right now. And we're going to talk about your AFR notes. Alex will go into more detail about the notes, but this section is just a reminder that 4C will not be complete until you upload your annual financial report notes. That's a document from local government. And like I said, Alex is going to go into more detail about that in his next section. That the notes document is going to be something that you add in almost last. It's because it's going to take some numbers and data from 2025, so you need to make sure that all of your entries are into 2025 and you have all of that information complete before you start pulling reports to enter into your notes. 4D is entity and fiscal officer. So the only required field on this screen here is the site number. So you'll just put in a phone number there for the contact. Any of the other information in that top section is optional. The bottom section should be the current fiscal officer. If this information needs updated, you'll want to go to General Maintenance Entity Setup. If you are a newer fiscal officer, you can go there right now if you would like and check the General Maintenance Entity Setup and make sure on that front screen you are listed as the fiscal officer. 4E is the inventory, hardware, and mailing. So the bottom section is the hardware address. If you have a desktop, you're probably not traveling with it, so that's going to be the desktop or the address where the desktop is. If you have a laptop, you may take it from place to place. You'd want to put an address where it is most often. If you take it home with you at night, it would most likely be your home address. If you leave it at the office, it would most likely be your office address. So just wherever a good place, if we were to need to recover that hardware, we would. The top section are the hardware tags. So if the number that's populated in here when you open up your checklist matches what's on your hardware, you'll just select these two boxes saying that those tags match. If you don't know where to find the tags, if you click the blue question mark button, it'll show you where on your hardware you should find these numbers. If the numbers do not match what the From UAN Records section, you can manually enter those on the left side. 4F is next year's fiscal officer and details. If you have newly elected or appointed a fiscal officer who will be starting and already has a start date for next year, you can select this option and enter in their information. If you plan on being the fiscal officer next year, there are no plans, you don't have a replacement lined up, you will just leave the option of same as current fiscal officer marked. The second section is just an acknowledgement that you do understand that when you close 2025, your 2018 data will be purged from the system. Alex went over this in detail earlier, but this is just kind of your acknowledgement that you do understand that. So any reports that you need per your records retention policy, should be printed, or maybe they're already on file somewhere for you. Let me check the questions here real quick. So somebody asked if they need to change their email address. How do they do that? If you want to send in UAN_support@ohioauditor.gov or give the UAN support line a call, they will instruct you on how to change your email address. All right, going to move on to this slide. I did not research these areas as much as Alex did, so I don't have any fun facts. But if you know where these photos were taken, please throw that in the chat. Okay, we have the guesses coming in, and it's kind of funny to me to see Zanesville and Marietta because this place is exactly between there. It's in my home county, Morgan County. It is McConnellsville, Ohio. Yep, okay, somebody got it. And it is the Big Muskie Bucket. So my slide earlier on the wilds, the top right corner there, that bucket was used to surface mine that land back in the day. And then the wilds came and they reclaimed that land and turned it into land for wildlife conservation. And the top right corner is that Miners Memorial Park in McConnellsville, and then McConnellsville is the small little town there in the left. All right, so we're going to jump back into carryover videos. I promised earlier that we would kind of take a look to see what this is going to look like on your checklist. So your remaining purchase orders that you haven't closed, you haven't cleaned up, you haven't deleted or closed will show up in this screen. You will have to review this screen anytime you open your checklist. So if you go through and you review it once, you check this box, you close it, you're going to have to check this box again. That is by design. We get asked every year if it's broken. Like, it's not broken, it's just, you know, carry over purchase orders with them encumbering money. Like Alex reiterated earlier, you can't encumber the same money twice in 1 year. So we have some entities that have some pretty significant hurdles to jump through if they carry over a purchase order that they didn't mean to, or they close a carryover purchase order. So we try to make a big deal about it at year end because, again, there's no good way to fix it. You cannot encumber that money twice. So we really want you to take a good look at this and only carry over what is absolutely needed. Like Bob said, you know, you want to pay for 2025 services, 2025 invoices with 2025 purchase orders. So you shouldn't be carrying over purchase orders to pay for 2026 work or 2026 invoices unless it's one of those like one-off contractual things that require you to have the purchase order in advance. In those scenarios, we usually recommend if you're carrying over a larger purchase order, say you ordered a fire truck or something that takes a while to build, reach out to those vendors, make sure they're not going to change their name. That seems to happen a lot for those larger purchase orders. And once they change their name, you cannot edit that carryover purchase order. So a lot of issues with carrying over purchase orders. So, like if you're carrying them over, paying them in January, that's great. If you're carrying them over long term, sometimes you want to do a little bit of research just to make sure that you're not carrying over anything that you're not supposed to, or you're carrying over anything that's going to be changed. Okay, and then good question in the inbox. If you close all your purchase orders and you don't carry them over, if you don't have any payments made in temporary mode if you make a payment in January, backdate that payment. That post date's going to be in January. So if you don't use any purchase orders in temporary mode or don't carry any over, this screen will be blank. So you still have to check the box each time, even if there are no purchase orders on this screen. So clearing out all of them doesn't really save you from having to click this box. Carryover withholdings, and as promised, I was going to show you what this looks like. So you're going to start with your total unpaid. This is what you should expect to see for your December or fourth quarter once you're kind of in this checklist area. If you haven't paid your Novembers yet, by the time you're looking at this in December or January, those would also be there. But my example earlier with all of the unpaid January withholdings, those should not factor in. So if you have any of them done in error, you don't want those carrying over. You want to get those corrected. What you should see on this screen here is just what you intend to pay, what is due in January of 2026. It's going to break it down for you by employee and employer share. And just a reminder that employee share is encumbered on the post date of the employee wage. The employer share breakdown here is what's going to hit your 2026 budget. It's going to be encumbered when you post your withholding payment for things such as OPERS and OPNF and Medicare. So any of those ones with employer shares. You'll be able to, you also have to acknowledge the screen every single time, but just a reminder that those employer shares that will not be encumbered until 2026 will need those budgets put into place. So you won't be able to make those withholding payments in 2026 until you have your budgets in place. And you will have to review this and check this every time. Once you get those dialed in and they are really good, you don't have to revisit those. The purchase orders, you sometimes have to revisit a little bit more and kind of tweak those as you go. Your withholdings, once you have them good and you know what they're supposed to be, that's one that you don't really have to babysit and make sure that those don't change. Just a reminder, bank reconciliation must be dated 12/31. And I do believe that this is the part in the best practices where it does recommend that you close your December bank reconciliation. You cannot open your January bank reconciliation until you close temporary mode, so when you close out of 2025. So just a heads up on that. Most people are not working on their January bank reconciliations prior to February anyways, but the reason why we do that is because you have the ability to delete your December bank reconciliation. So if you open your January bank reconciliation and then delete your December's, everything's going to be jumbled up. So that is intentional, that we do not allow you to open January while in temp mode, and that is so you have more flexibility with your December bank reconciliation. Okay, there was a question in the inbox that since we're talking about carryover purchase orders right now, I'm going to go ahead and address how long can you carry over a purchase order? So theoretically, you can carry it over indefinitely. But when you carry that over, it's still whatever year's encumbrance that you created that purchase order. So, if you have one that's spanning a couple years because you're waiting on a big project to complete, or there would have to be some reason why you're holding off. The example's 2 years. You wouldn't want to do that for fun, and you wouldn't do that for just like normal everyday transactions. But if you do have a specific need for that, you can carry it over indefinitely, but once it's closed, it's going to do the same thing. You cannot re-encumber that money in the same year. So if the vendor changes, anything like that during the process of what you're waiting to pay that invoice, you're going to have some issues with that purchase order. All right, we were discussing what questions to answer and when. There are a few 1099 questions in the inbox. Alex is going to discuss those after break. We have one more tiny little section before break. We're going to take a quick break, and then Alex will kind of answer some of those questions that were related to his section. Another trivia slide here, if you guys know where this is at. Most of my slides have been in Southeast Ohio because I am from Southeast Ohio, but this one is not. This one is from Southwest Ohio. So this is in Houston Woods State Park in College Corner, Ohio. And I do have a little neat fact about this place. This is a great place to go fossil hunting. So anybody who is into that, apparently you can go here and find all kinds of fossils. One more section. We're maybe go into break just a few minutes late, but bear with me here. We're going to get through this really quick. We're going to talk about that fund mapping on 4C. Fund mapping is kind of one of those things that's kind of getting phased out. It's not necessarily, it's not common practice for a lot of entities. We do have one example from LGS that they request that all entities that have this fund do. So we're going to review that one now. So the fund mapping is done under general reports and statements, year end, AFR fund utility. We're going to talk about this system message in just a second. But what we really want to take a look at is typically it's your custodial funds that you would want to map. You do need to talk to local government if it's anything besides this one example that we are showing, because some of them are different. The unclaimed money fund, the one we have an example for, that one is always going to get mapped to your general fund as a regulatory filer. So we're going to select that fund. We're going to take a look at that. When you hit edit, you have the choice to select how you're filing. And most of you are probably filing regulatory. And then this is what your custodial fund is going to look like. So when it is unmapped, it's going to report to a different area in your combined statements for your annual financial reports. And that's why it's requested that you map that to your general fund. So it's reporting to the correct place on your annual financial reports. This is the system message that we skipped earlier. It's just stating that UAN support cannot help you determine which funds need mapped. If you have more custodial funds or if you have other funds that you think may need directed to a different fund, have that conversation with local government services and they'll make sure to point you in the right direction. So this is what the map to section looks like. Of course, it's not this kind of mapping. It's going to be more of something like this. You are directing that money from the unclaimed monies fund to report to your general fund. This does not change any of your funds in UAN, does not change any of your balances. It's only for audit reports, for your annual financial reports. Whether you should or should not map is totally between you and local government. Again, and what it's used to do is to merge a fund into another fund for reporting. It does not change any fund balances or any day-to-day reports. And you may not need to map any funds at all. If you have a custodial unclaimed monies fund, that one, like I said, is the one that local government asks us to show you guys how to do to make sure that you're doing that at year end. So to do that, if you have your unclaimed monies fund in your list, if you look at your fund utility, we'll select both funds. Then you're going to hit that edit function and then regulatory if you are a regulatory filer. And then if we take a look, you're going to see your general fund balance before mapping. We're going to switch over to that unclaimed monies fund. We're going to select the map to area, select the general fund. Then you'll see that section there go away. So that just means it's going to direct that to wherever the general fund is reporting to on the reports. And when you click save, it's going to send that money to your general fund. So if we switch back to your general fund, it's going to increase that fund balance. And again, this is only for reporting purposes. It's just putting that all of those funds together. And if you take a look at your fund utility screen, the map to section now shows that unclaimed money fund mapped to the general fund. If you're unsure if you've done this before, toggle years to different years, prior years, to see if there's anything in that map to column. This would also be a good indicator if you have specific funds that have been requested to be mapped before. It'll kind of give you a starting point to talk to local government of, hey, we mapped this fund to a different fund, in 2023. Do we need to do that this year as well? So you just toggle that year and look at those previous years for that information. Another trivia question. So I'm going to start with this trivia here. It's funny because one of you on the last trivia slide actually answered this one correctly. So if you happen to know where this is, also in Southwest Ohio, and ironically also a good place to go fossil hunting. Okay, there was a few correct guesses. It is Cedar Creek State Park in Waynesville, Ohio. Scott, if you are listening today, I know he was at the in-person on Wednesday. He is from Waynesville, Ohio, and had no idea this existed. So if you know Fiscal Officer Scott from Waynesville, give him a hard time about that. So I'm going to hand you off to Alex. He's going to start talking about how to complete manual forms.
Thank you very much, Lauren. And we will go to our manual input forms. So these are not required for everybody, but if you have debt or manual assets that you have to record, then you'll need to take care of these, and they will be manual inputs into UAN because they're things that UAN isn't tracking. So for manual input forms, you're going to go to General, Reports and Statements. You're going to click on Year End, and then the bottom four there, the cash and assets not recorded, cash reconciliation, schedule of debt service, and the schedule of outstanding debt is what we're going to go over in this section here. First, we're going to do the cash reconciliation. If you complete this, it is going to be the first page of your AFR statement. And all you would do is put in the information of assets that you'd have here. So bond and coupon clearance amount, payroll clearance account, any of these debt accounts, other outside accounts. This is where you'd list that information of things not in UAN, and it'll appear on the first page of your AFR statement. This data entry, like I said, might not be necessary if you don't have any of those accounts. If you do, here's an example of how that's going to show up. It's going to give all your totals on the front of your AFR report there, assets outside of UAN. Again, you're only going to complete these if they apply. If you do have to fill these out, you're going to print them for your records. They are a part of your annual financial report. You don't need to add them anywhere else in UAN. Once you put them here, they'll go into your AFR submission automatically. Cash and assets not recorded. The Appendix 2 of the year-end procedures goes over this in detail if it applies to your entity. So I would recommend, if you have assets outside of UAN, you go into Appendix 2 of the year-end procedures. That's the larger document, and that'll give you the detailed information on those. If you have cash and other assets not recorded in UAN, all you have to do is put in the information here. Very basic data entry. It's going to be your account number, the institution, and a description of what it is with the amount. And that way it'll get added to your annual financial statements. And that would be if you have something outside of UAN that you were told to put in by an auditor or something like that, that's who would have to enter that information. The next are going to be a little more common: schedule of debt service and schedule of outstanding debt, because debt's more common with local governments. So your manual input forms on debt, the thing to remember here is the schedule of debt service is simply debt that was paid this year. So schedule of debt service would be debt you paid in 2025. Schedule of outstanding debt is projecting forward the schedule of debt that's going to be paid moving forward in future years. You would want to take that information and lay it out in an Excel worksheet. It's usually the easiest way to do it. And you're going to have to do it in different increments. So projecting forward, the first 5 years of debt you'll be paying, so starting in 2026 for 5 years through 2030, each individual year will be listed as how much is being paid in that year. After that, you're going to group them in years of 5. So say you have 15 years of debt going forward on your schedule. The first 5 years you'll do individual years. The next set of 5 years, so years 5 through 10 or 6 through 10, those are going to be grouped in one entry, and then years 11 through 15 are also going to be grouped together in one entry. So first 5 years are individual, and then sets of 5 after that. Here's what that'll look like. Back to the schedule of outstanding debt, and again, that's debt paid this year in 2025. So when was this issued in our example? This was debt that was issued in 2023, but we paid some in 2025. What was it for? The description: purchase of a truck for zoning. Interest rate was 1.9. The balance as of January 1st, 2025 was $25,000 left to pay on this debt. What did we pay? We paid $5,000. So $5,000 of debt was retired this year, leaving us with a December 31st balance of $20,000. In the bottom right corner, you'll see the total of all debts entered. So if you have multiple debts, that's the aggregate in the bottom right. Each individual debt, the information's entered on the left. You save that, and then we could move on to the next one. So we also have debt from stormwater improvements in this example. We started that debt in the year 2025. We put in our interest rate. We started that, say, mid-year of 2025 when the storms hit in April showers. And our balance on January 1st was 0 because we didn't have the debt then. In April, in our example, we took out $150,000 in debt, and we didn't pay any this year. So it would add the $150,000 as our December balance. And on the right side, it adds that to what we did on the truck this year also. So that gives you the information aggregate on the right, and that'll all be put into your annual financial statements. The schedule of outstanding debt is now completed. This is what it'll look like, and then you just print that out. And here's how the report is going to show for you. It's going to show our description, the year it was issued, the interest rates, and where you started the year and ended the year on that debt. Next, we'll go on to the schedule of debt service. So this is the debt we're going to service moving forward. So this is our plan. We're going to lay it out on that spreadsheet. The first 5 years you have to enter individually. So year 1 is 2026. We're projecting that forward. In this example, our principal is $15,000 with $2,100 in interest. And then we'll save that and move on to the next year, individual. So we'll enter the same information for 27. And you note on the right side, as we save these years and keep entering the years manually and saving, the aggregate is growing on the right. So that's adding it all up for you. Again, through 28 and 29 and 30. That gets us through our 5 years, projecting forward. Now we're going to do our first large jump. So after you complete the first 5 years, the next 5 are going to be lumped together in a summary of 5 years. And then the 5 years after that will be lumped together. So you could take that out as long as you need to. If it's 15 years in our example, or 50, the first 5 you do individually, and after that it's groups of 5. It all gets aggregated to the right, and then you just hit save. All your years will be posted in here, and you could print a copy of that report. So that is debt moving forward in future years, the schedule that you'll be paying. And it just lays out the information that you put in manually and makes it part of your annual financial statement. Printing your AFR statements. To do that, you're going to go to General, Reports and Statements, Year End, and click on AFR Regulatory Statements. These are pretty common questions. We get a lot of those when banks or insurance company needs your information, and during the year, it's not a common report you see, so a lot of folks will call in and ask for where to find the combining or combined statement, and that's a common one. We take them here because it's a year-end report. So you'd want to run this for your year-end 2025, and you'd want to print these for your records. You'd save these reports on the drop-down. There are several reports on the drop-down, and you could get an error that says no data on report. You would get that if you don't have the right type of account. So if you don't have any proprietary and fiduciary accounts, you would only run the governmental. If you tried to run the proprietary and the fiduciary combining or combined statement, you're going to get a little pop-up that says no data on report, no data to report. And that just means you don't have those types. So you'd only run the governmental and you'd be done. So be sure to save these down, and you want to keep a record for your own files there. And your AFR statements would be complete at that point, and that is what you'd want to save for your notes. We'll jump to trivia here real quick. Got a section. Here we have a historical house museum in the state. It is General William Tecumseh Sherman's childhood home, located where in Ohio? The general is famous Civil War general, and his famous quote is, "War is hell." So let's see if anybody knows where General Sherman is from in the comments. Looks like we got a lot of folks who realize that his house is in Lancaster. So there's the Sherman House Museum in Lancaster, Ohio, Fairfield County. It is the birthplace of the famous Civil War general, and also the birthplace of Senator John Sherman. The house dates back to 1811 and has a fantastic Civil War exhibit. So highly recommend our history buffs check that one out. And it's always good for the kids too to learn their history. Moving on, we're going to go through our AFR notes and closing out the year. And after this section, we'll do another Q&A. So get those questions ready, and we'll keep going. So we did the manual input forms, and now we have to finish the rest of our AFR notes. So if you're not familiar with the notes, if you're a new fiscal officer, on our website, we have a training video, again, uanlink.ohioauditor.gov. You're going to go into training and year end, and for this one, you're going to select the notes training by local government services speaker. And they walk you through what needs to go in the notes, how to set up your notes, and all kinds of tips like that. So that's on our website if notes are something new for you. You'd want to watch that video on UAN link under training, year end, notes training. If you are ready to set up those notes, you're going to go to General, Reports and Statements. Under Year End, you're going to click on AFR Regulatory Statements. And we were in here before. This is where you're going to find your combining report, your combined statement, comparison of budgeted. But the very bottom is the Budgetary Notes Information Export. That's the information it's going to be an Excel file that gets exported and put into your footnotes. So you're going to want to take that, and that will give you the numbers that you need to enter into those notes. Again, that's under General Reports, Year-End, AFR Regulatory Statements, and you're going to do the budget export. You're going to add your notes to the financial statements. So here's a template, and that's what it's going to look like. You're going to go into your year-end procedures and follow the instructions in there. Every year, Local Government Services puts out the new shell, and it has the updates up front and highlighted. A lot of folks will copy over the prior years and just update their figures as they need to. But if you don't have the template, we recommend you grab that new one. Once you're done editing, you'd save that in UAN as a PDF and upload that. And we'll go through that process. But so your notes are done outside of UAN and then imported into UAN, where all of your other statements and reports that go through the year-end filing are basically done in the UAN, except those few manual inputs, which are things held outside or the debt that we went over in the last section. To get that template for your notes, you're going to go to the Ohio Auditor's website. The fastest way to get there is if you have UAN open, you're just going to click on the Ohio Auditor name in the top right corner, Auditor Faber, and then you're going to go, once on that site, under Local Government, you're going to go to Reference Materials. Once you're there, it's going to take you to the reference material section, and you'll click on Regulatory. And here's what it's going to look like. So if you're a township or a village, you want to find what's right for you. And under there, the section is for notes, and that is going to allow you to download the Word document. You're going to edit that Word document, and then when you're all done with your notes and you pull out that information from the UAN export from the budgetary notes document, that Excel file gives you a little table you got to put in there with the information from UAN. You're going to save this as a PDF. If you need help saving the Word document as a PDF, give us a call at UAN support. We can walk you through that. Once it's saved as a PDF, that's where you're going to upload that file into UAN. To do that, you're going to go to General, Reports and Statements. You're going to click on Year End again. And instead of Regulatory Statements where we were before, it's a couple up under AFR Notes and Documents. Just click on that, and this is the only file that you have to put under AFR Notes and Documents. Some people think you have to print out reports and then add those manually from UAN. All your UAN reports that are needed go to the Hinkle system and to the auditors at year end, so you don't have to worry about that. All you have to do is add your notes in this section. So you'll hit Add here. Then you're going to hit Browse, and you're going to select that PDF file for the 2025 notes, and then you're going to hit Open, and this is what it's going to look like on your screen, and you'll hit Save on that one. Again, it can only be a PDF file, so you can't upload that Word document to UAN. It's got to be that PDF file. Then you want to verify what you uploaded into UAN to make sure it's right, because if you submit your year-end and you don't have the right notes, or you grab 2024's notes by accident, or your meeting minutes, you're going to have trouble, and it's not going to be a fully completed submission, and then you're going to be late or have issues with that. So verify what you put in there. To verify, you're going to click on the notes you just uploaded and just hit Display. You want to make sure it's not a honeymoon photo or a vacation picture from this year, and it truly is your AFR notes. So we'll display that again, make sure it's the right document. The note should look something like this, and it's your PDF statement. Want to make sure you got the right year in there, and then you're all set. Don't overload that section. You're only uploading the one PDF for the notes file. A lot of people squirrel a lot of reports away in there, and it's just extra work for you that is not needed. They automatically go. So on section 4C, you're going to get the green check mark as soon as you upload your AFR notes file as a PDF, and that is the only file that needs to go in there, just the one. So don't overload that section. All right, we are on to questions. So give me 1 second and we'll review what's been coming in there. And I know Bob has worked on a few, so give me 1 second and we'll review and get Bob on here.
All right, thanks, Alex. Yeah, we've got quite a few. So let me, some of these I've already answered individually, but I'll shout them out to the rest of the audience out there. Okay, one person had a question about the bank rec, when we were talking about bank rec back a few items back there, slides back, about the bank rec notification for council. If that's an option that you can choose through e-services. That's not something, it's something that UN will implement technically, but it's not something that you would notify us about. That would go through audit. You probably have your board resolution for that. And then they would notify us to start enforcing that through the software. Okay, let's see. One question, again, I'll just stay on the bank rec for a minute, saying, I guess this person maybe gets done with all their transactions in the middle of the month of December, and they're wondering, well, why can't they post a December 31st bank reconciliation earlier? Well, that's true all throughout the year. If you're in the month of March and you've got everything anticipated done for the month of March, it's March 15th, the bank rec can only be dated March 15th, the current calendar date. You got to wait until it's March 31st. Basically, I mean, UN cannot predict the future, right? If the month is not over with, there's a possibility that there could be some kind of other payment. And since bank recs generally, the December 31st is the exception, but generally the other months of the year, once it's posted, it's final. We do not want you to be able to post anything past the current date, even though you think, hey, we're a small village and everything's done for the month. Well, you could be surprised. There could be another transaction. So that is the idea there. All right, let's see what else could apply to more than one person here. Another PO question. If I have a big project that goes from year to year, can I close the purchase order and reopen a new one in the new year? Again, that's more of an audit question. In general, like if it's encumbered in 1 year, you would continue to pay on that if it's a contract for multi-year off that PO and it belongs in the older year's amount, but there can be exceptions to that, so you want to run that by your state auditor. Another one on POs. If you have a PO open in 2025 and the vendor doesn't invoice until 2026, do you close the 2025 purchase order and open it again? So that's not necessarily a big project. No, you don't. You don't have to close it because it's part of 2025's budget that you encumbered. Now, if you want to find out what that invoice is going to be, so if you have an available balance on the PO that's left of 1,000, the final invoice is only 700, then you don't want to waste that 300 carrying it over. You can adjust it down in 2025 to just the $700 invoice, and that way you only carry over exactly what you need for that final payment. All right. I think this other one was answered. The question about 1099s. What report can I run to see how many 1099s we have? And I'll give you a report if anyone has that question too, if you want to jot it down. But I'm going to say it's not perfect, perhaps based on what you're thinking, but let's give you the path here first. It's under the general menu, then reports and statements, and then vendor payee reports. So that's not accounting, that's general reports and statements, vendor payee reports. vendor payee listing. Make sure you display it or print it to see all the columns. And one of those columns is going to show you whether it's going to show you the amount, the year-to-date amount of all the payments. So that kind of gives you an idea if they only had payments of $200, it probably. And then if and it's going to indicate whether you marked it as needing a 1099. So we at UEN do not automatically determine, because IRS guidelines can change. So we do not automatically determine whether you need to send them a 1099. You determine that under accounting maintenance. General maintenance vendor payees. You just mark that vendor whether they should receive a 1099 or not. So you could have some newer vendors that maybe you forgot to include that checkbox. So it's not actually foolproof there, but it's based on your input into the software. Even if you don't have them marked as something that in that maintenance area, when you go to print the 1099s, you can choose other vendors that weren't marked that way in case you didn't get to that. All right, let me look at a few other spots here. Coming in. I have the Auditor state shell or template for the year-end notes. The last time I checked, which was, I believe, yesterday, they still had this. They have not updated the shell from the 2024 template, or shell, synonymous term there, for your notes to annual financials. But they typically do. So right now, all we can, we don't, that's not something UEN does. It's the local government services will update it, add a few things that might be current for 2025. So you want to keep an eye on that. You can certainly download it and start working on it, but then I would check, still keep checking in January before you submit it, or to see if there's any updates to it. And then you don't necessarily have to, you could just incorporate the updates into your draft. So you can always start drafting the notes right away, but bear in mind, most likely before the end of the year, the local government services might update that, even if it's just one or two minor changes, which is typically that's all it is. Okay. Can you repeat how to find the notes templates again? Well, that is in Appendix 2 of the year-end procedures. It's actually the same place you'll find. So if you have the old copy of the year-end procedures, you could get that today. We'll be including mid next week, the year-end procedures on our website. And if you get the version update as soon as it comes out, that will be saved on your computer. And so you'll get the latest of that. So I would just go that route. That'll give you all the information you need for how to get to the templates and to save them onto your computer. Is there a way to eliminate the account codes in the budget worksheets that are not used? No, unfortunately, that is the categories cannot be eliminated. The account codes, you don't have to print it by account code. But if you want to include some account codes, the ones that are active, that's, that basically there is not an option. If you're going to include account codes, include all of those that you have currently in the UEN software, active or inactive. So it tends to be a long report. As long as you don't budget it, I mean, it doesn't really do any harm. It's just kind of a nuisance. Let's see, how long can I pay out of a 2025 PO? If the PO does not have an expiration date on it, and it's a project that you think Auditor State would approve as a carryover, then it's just as long as that project is going and you have a balance. And it's, the payments are not for new encumbrances essentially, then you can keep making payments. So again, it's when you carry it over, it's because you had a commitment in the previous fiscal year that on the previous fiscal year's budget, and it's something that, you know, a continuous contract that you're paying that vendor for. All right, let me see if I understand this. I think I understand this one on then and now POs. I do not believe, so they're asking about then and now POs. A then and now PO would mean I didn't open up a purchase order, like say in this, normally it'd be, say if it's in June, I never opened up a purchase order for an account code, but the right account code, but now I'm making a payment in July. The way it normally works is that, okay, you want to be transparent and show that, well, you should have opened up the PO back in June, so you can do the then date of and then now in June, and then, but then the current date for certified would be in July, in that example. That does not work when you're going for like the end of December, then date, and then January as a certified date. You just wouldn't be able to, that's just because of the crossover of the year. I don't believe that's going to allow you to do that. So you would just have to be transparent. If you have temporary mode open, probably the best thing to do would be to open it. You may have to, you could run it by an auditor. I'm thinking you might open a regular PO in December and make clear notes that this is essentially was not really encumbered. It's essentially equivalent to a then and now. Or open it in 2026 and make the notes. So you basically just want to leave a good paper trail for your next audit of those years, whichever you choose. That's the most important thing. But I don't have a clear answer on that, honestly, which year would be the best. You may want to run that by an state auditor to see what they would prefer. All right, so we've answered a number of those. We can come back to some of them on the list, but we'll have to keep the pace going and hand this back to Alex.
Thank you, Bob. Appreciate you taking care of those questions for the crowd here. We'll open up with one more trivia slide we've got. We're back to Ohio's Art Barnes, and this is the first Ohioan to receive the Medal of Honor. It was way back in the Civil War, 1863, and he got it for taking part in the Great Locomotive Chase. Does anyone know where the Jacob Parrott Art Barn is? I think I stunned you guys with this one. It was great trivia. No idea. All right. I'll keep it going here. The Art Barn is found in the city of Kenton, Hardin County, off Highway 68. So very cool piece of art there and honoring Ohio's history. Closing out the year. Moving forward, we've taken care of our AFR documents, which is basically we had a Kenton answer. Nice. Closing out the year, we've gotten our AFR notes added into UAN. We've taken care of any manual entries we need to make. And now we're just basically ready to take care of the end. So we're going to go to general maintenance, year end, and we're going to open up that checklist again. Lauren was very kind to go through it for us the first time. We've had some questions come up, and we do every year on the carryover sections, both of them, for POs and withholdings. So we'll start with 4G here. This is, as Lauren said, it's designed for every time you close out of this section, when you come back, you have to click the I acknowledge to get the green check mark. Because if you leave this section, you could potentially make a change in UAN, which will impact your figure here. So you want to really understand, don't just click the check mark. You want to understand that that is the correct total of purchase orders you're carrying over, because it will impact next year's budget if it's wrong, especially if it's wrong by a lot. So in this section, it's best to trust but verify. Trust your work, verify you got the right number that you're expecting to see on those POs that you're carrying over. 4H is the carryover withholding section. Here you're going to carry over any unpaid withholdings. So typically that's going to be like OPERS or OP&F, something you pay in the next month usually is all you expect to carry over here. Could be insurance, something like that, but it's typically a low number. So you want to make sure that falls into what you're expecting when you do 4H. Then you're going to hit I acknowledge. Do not just hit I acknowledge because you don't want to mess up any kind of wages, W-2s, or cause yourself year-end trouble. Once you take care of that, you're ready to close the year. You acknowledge those. You've already taken care of the rest of the check marks. Everything's green. So you go down to the very bottom. You're going to click Finish and Close the Year. And then you're going to click on I affirm. And you're going to read that paragraph. It takes care of everything. You make sure you fully understand you're closing out the year. You're not making any more changes. And all your data is going to be submitted to the Hinkle system. After this, you click Close 2025. And then you're closing the year in the process. So you'll get this screen about the database integrity, same one you get every day. And then you're going to close the year. You're going to get a couple pop-ups here. After you close the year, you're no longer going to be able to enter 2025 transactions. Are you very sure? And make sure you have thoroughly reviewed the carryover purchase order and carryover withholding section. So you get that pop-up because they're very important. You don't want to hurt your budget for next year. So please review. You're only carrying over what you have to, bare minimum. After that, you get one more pop-up. Are you sure 2025 is complete? Are you really sure this time? You click OK on that one, and you're ready to actually close out the year. You're going to do 3 backups. The first of these backups is going to be the last backup of 2025. It's your normal backup process. You're going to go in here and select your normal backup, if it's flash drive, network, CD, whatever that is, and save that backup. So just hit start. It saves your last backup of 25. If at this point the system were to crash, you have a power outage, something goes wrong with the computer, it's not the end of the world. Give UAN support a call. It really depends if that backup saved and the year closed, or that backup didn't save and you just have to redo it. There's different scenarios. UAN support is happy to help you, but it's really not a problem if that were to crash at that point due to any kind of circumstances. Assuming that all goes well, temporary mode will now close and you'll move on to the second backup of 3. Backing up 2026, this is going to be your first backup of the year 2026. So you'd save that backup normally. And the third backup is going to be how you submit your files to the Auditor of State's office via the Hinkle system. We strongly recommend you submit them online. Even if you have a weak internet connection, it's really not a problem because you're only sending over a couple reports. It's nothing heavy. It's not downloading a program. If you can go to a website, then you can do this online. This is the most recommended way because if you mail a CD or a flash drive, CDs and envelopes can break. I've seen lots of those, had to call people. If they run the CD or a flash drive over a heavy-duty magnet at the post office, that's going to wipe it clean, so they're not going to get the data, and your year-end is going to be late. The best way to do it is the online submission, and that way you know the Auditor of State gets it because you get a confirmation. So assuming you're doing it online, the third backup, you would select Internet Submission and then Start, and you'll get the progress bar, and at the end, it's going to tell you you've successfully submitted, and give it a few days, and then you could check your status online. That completes closing out the year, and then your 2025 is officially closed, and you'll go into 2026 at that point. We'll go here to our next trivia section, and we are coming down the home stretch. A couple more points I want to go over. We're going to go over the final things of what to do after you close out the year, and then we're going to go over how to remove accounts and funds before we wrap up for the day. So we've got another Ohio art barn, and this is Commodore Hazard Perry, hero of Lake Erie. Does anybody know where this barn is located? He was a hero of the War of 1812. Oh, we got Oak Harbor, Catawba, Ottawa County, all excellent selections. It is in Ottawa County, Oak Harbor. So you guys know your stuff. Kind Commodore is famous for saying we have met the enemy and they are ours. So very excellent hero of America there, and he basically made sure Ohio and Michigan became American territories. You guys know your history. That was good. Okay, so almost done. We're getting there. Stay alert. Now we're going through, you've closed the year successfully. You've submitted all your Hinkle system information. What's next? So steps after closing the year. First thing you're going to notice when you go back in UAN after it closes out, you're not going to have that selection anymore. So you're not going to see the toggle between 25 and 26. You're just going to go in and it's going to be in work year 2026. First thing you want to do here is print the cash summary by fund, because we really want to make sure everything's accurate and you don't have any issues here. So you're going to go under Accounting, Reports and Statements, Fund Reports, and you're going to select the cash summary by fund. We're going to do this twice, and what we're doing is truing up our cash summary by fund for the year 2026 in January, so your start of 26, and we're going to compare that to the end of 2025, which will give you your December ending numbers. It's just a safe check. This should match no problem. So compare those and make sure you're all right. Next, after that, we're going to talk about the certificate of total amount from all sources available for expenditures and balances. This is also known as the year-end balance certificate. To get this certificate, you must be logged into 2026. It's possible to get this certificate while you're in temp mode and you're logged into both years, but you really don't want to get it before 2025 is finalized, because the numbers would then change and you'd have issues with the county auditor. To get your year-end balance certificate of all resources, you go under Budget, Transactions, Year-end Balance Certificates. And here, you're going to make sure you're in 2026, and you're going to hit Add, and then you just have to name it. And as a side note, you want to uncheck any funds that are not budgeted. So that could be something like our unclaimed money fund. Because it's a custodial fund, the default for all those is custodial funds must not be budgeted. That's the default from the Auditor State Office. You could check that by going into Entity Setup under General Maintenance Entity Setup, and it's the second tab down on the left. Right below Entity Information is System, and you'll see Budgetary, and that tells you your custodial accounts don't get budgeted. So you don't enter a revenue budget, you don't enter an appropriations budget, you don't enter purchase orders for the custodial accounts, because you don't have to. There are rare circumstances where you have been directly told by an auditor that you do have to budget those, and that's an option. But the default and the vast majority is those don't get budgeted. So assuming you are a standard, those do not get budgeted, you'd uncheck the unclaimed money fund. Then after you've named it, you got your 2026 year-end balance certificate. You're going to print that out, and you're going to keep a copy for your records and send one to your county auditor. The county auditor needs this because they use that to prepare your first amended certificate. So you get your estimated certificate from the county auditor based on the estimates you did about 6 months prior on your budget for the full year of 2025. This is what you actually got in 2025. So if you fell short on your revenue or went over on your revenue, that would let the county auditor know. So this is, it could potentially give you an amended certificate where it's different than the estimated certificate you first had. So the year-end balance certificate is going to be important, and you're going to get that to the county auditor as well as keep a copy for yourself. Meeting annual requirements. You have 60 days after 12/31/2025 to close out the year. If you don't close out 2025 before the 60 days is up, UAN is going to freeze, and it's only going to allow you to work in work year 2025. You'll lose access to 2026. So basically March, if by March you don't have 2025 closed, you're only going to be able to work in 25. You have to close it out. You won't be able to continue simultaneously in 26 into March in UAN. You have to get that submitted to the Hinkle system. and your filing date equals your receive date from the Hinkle system. So when you file those electronically, that's going to be the date it's received, and that's your filing date. Incomplete filings are not complete. So that kind of makes sense, right? What does an incomplete filing mean? It means if you submitted all your UAN data, but you didn't have the notes or didn't have the right AFR notes attached, then it's not complete. So what people often do is they might outsource their notes where they have a third party write up their notes. That's fine. You can close out the year, do your submission, and then when you get those notes, you can come back and resubmit if you want to. But you have to make sure those notes are in your submission. So it's best to just wait as long as you're going to still hit that 60-day mark. Your filing status. You also want to verify your filing status. You log into your eServices account, and you're going to see the Hinkle system filing status on there. And you're going to tell you that you're filed successfully and you're all set. It's only going to show you under that dashboard the files required for the Hinkle system. When the auditors come to look at your information, they'll have all the documents they need for year-end under the audit workbench, which is a separate system. So if you don't see all the reports you expect to see when you log into your eServices account under the Hinkle system, that's perfectly fine. You don't have to worry about that. The auditors will have access to all those UAN documents in the software they have there. Once that's done, you're going to publish your notice. I always recommend you talk to local government services about this one if you're not sure what the newest Ohio revised code is. I know it's been updated to allow for online. It used to have to be posted in the newspaper. Some places are allowed to post it in the large public building and different places. So make sure you're following the Ohio revised code and talk to local government services if you're not sure where you need to post your annual financial report completed notice. Ohio checkbook is our next thing here. And Ohio checkbook is not mandatory, but it will send your information automatically to the Treasurer of State. All you have to do this is log in to the UAN website, UAN link. If you log in just like you did to register for this presentation, instead of doing that, you would just click on the Ohio checkbook settings and you'd click authorize. And that's it. It would take your year-end data and it would post it to the Ohio checkbook. So very simple. If you want to do it, you can. You don't have to do it. And the last thing you need to do here in this section is print your 2025 year-end reports. So you want to go in, print out all your year-end reports, and that's going to take care of your compliance and your data retention purposes. We've got one more trivia section here. Let's see, we've got another art barn, and this one is my last one. Does anybody know where the Packard Art Barn is? A little bit of Ohio and Americana history here. Packard is a famous automobile that was formed and made in Ohio, and their advertising slogan was, "Ask the man who owns one." We've got Warren, no idea. All right, the Packard is in Champion Township, Trumbull County, right on Center Street. So pretty cool. That's where they're from there. Okay, another reminder, now that your year is closed, you want to make sure you're taking care of your 1095, 1094. If you are the small select UAN users who need this, you want to make sure you have your TCC code with the IRS for the AIR system. And now that your payroll is done, you're going to send in the IRS forms for the AIR system for the 1095, 1094 here. If you're doing this, UAN will create the file to upload there to the AIR system. And new this year, there's a test file. So you go under Payroll, Reports and Statements, under External Forms, you'll click on 1095 and 1095 and 1094 forms. If you need the instructions, they're step-by-step in the bottom left under the FAQ. Basically, all you're going to do here is hit the file button. That's going to create the e-file for you. And end, in the top left there, there's a test file. So if you have to e-file your 1095, 1094, the IRS requires a test file for the first year. If it's your first year you're doing that, you produce that test file right there, upload that to the AIR system, and then you can file your e-file. If you did it last year, then you're all set. You don't need to do that test file. Next step after you're in the new year is verifying your revenue budgets. This is an important one. So to verify your revenue budgets, first you want to compare it to your amended certificate. Go under Accounting, Reports and Statements, and Budgetary Reports. And we're going to look here at the total resources available in UAN. Those must match your amended certificate from the county auditor for total resources available. So you want to make sure you get your revenue estimates from the county auditor that produces your total resources available. Total resources available is the cash you start the year with, plus your projected revenue budget for that year. To get that report, it's under Budgetary Reports, and you're going to select the resources available for appropriation. Next, you're going to go to your permanent appropriations, assuming that your budget did, your revenue, we'll back up for a second here. I want to make sure your revenue budget does match. If it doesn't, then you might have to make changes in UAN. If your revenue budget doesn't match because your amended certificate changed, then you'd have to update your revenue budget in UAN. If the amended certificate might have changed because your year-end balances were different than the projection before. Maybe you got more money than you thought, maybe you got less. So that's something that would cause a change. You need your budget in UAN to reflect what the county has on that certificate. So I just wanted to get there before we move on from the revenue. Moving past revenue, you want to check your permanent appropriations. So temporary appropriations, as we said today, cover the first 3 months or the first quarter of 2026. Every year, temporary appropriations will cover the first quarter if you go the temporary route. So temporary appropriations basically just buy the board more time to put together the permanent appropriations, but you could still keep paying your bills in the first quarter. By the time the first quarter is done, permanent appropriations need to be entered. Also, any purchase orders that are entered under temporary appropriations need to be redone as permanent because they're only designed under temporary to be good for the first quarter. You're required to have these adopted by April 1st, and then you'd enter your permanent appropriations. You do so by going to Accounting, Maintenance, and Appropriation Budgets. Here you would just select Permanent Appropriations, and then you want to verify that your permanent appropriations match what has been adopted by the board. So you go to Accounting, Reports and Statements, and print a budgetary report on that after you enter those permanent appropriations, and you're going to look at the comparison of budgeted and appropriated, and you're going to make sure that matches what your board approved for your final appropriations. So check that final appropriation column. By this point, we've checked our revenue against what the county gave us for our amended certificate, and we've checked our final appropriations against what was adopted by the board. So we know our budgets are set. Also on this report, you're going to see a variance column, just to make sure everybody knows what that is. Your total estimated resources, again, that's just the cash you start the year with, plus the revenue projected for that year. So in this case, the total estimated resources would be the January 1st cash balance and all the funds, plus the revenue that is projected for 2026. That gives you your total estimated resources. Your final appropriation column here is just the final appropriation budget that you entered into UAN. And the variance column is how much is left over. So it's how much money was left in that fund that has not been appropriated. So that's basically money set aside from the budget. It's in the cash balance of the fund for the total estimated resources, but it's not going to be included in the final appropriation budget for whatever reason, and that's fine. Now we're going to the section of removing old funds, and this is getting close to the end of the day for us here. We'll have one more section for questions and a few slides. Removing old funds is part of a process of removing your appropriation accounts, revenue accounts, breaking any old links to those funds, and then you'll be able to remove the old fund. And we'll go over that in detail here. If you have any questions on that, you want to give UAN support a call, and we could walk you through this section as they come up for you, but we'll cover all the details next. The prerequisite to removing a fund: first, it must have a zero carryover balance in 2026 and no transactions. So you can't remove a fund that has a balance or transactions in the year 2026. We recommend you do this early in 2026 because you don't have any transactions yet. And if you're trying to remove the fund, it should have a zero balance and you're not entering in any kind of budget. So that's revenue or appropriations. If it has a cash balance or a budget or transactions, you can't remove it yet. So the ARPA funds are funds that we're going to look at removing if they're not gone yet, or COVID funds, that whole series. Those would be something you're going to remove. You could also remove any accounts in the same way. That's part of the process. So the fund, if you're going to remove it on a whole, it can't be in any 2026 created document. And by that, it would be showing under your year-end balance certificate. If it was run in the year-end balance certificate, so that fund you're trying to delete was included there, not the end of the world. All you have to do is go to Budget, Transactions, under year-end balance certificate. You would delete that certificate. Then you'd go through the rest of this process of removing your fund, and then you'd rerun that certificate without that fund on there. It's not going to impact the certificate because the fund would need to have a zero balance to be removed anyway. To remove old accounts, which is going to be the first stage before you can remove the fund, you're going to go to Accounting, Maintenance, Revenue Accounts, and you're going to change the status there to Removable. That's going to show you any accounts that you could remove. And if you're removing a fund, you'd first remove any of those accounts that are associated with that fund. You'd carefully select just those revenue accounts associated with the fund you want to remove. If you want to remove just revenue accounts and not a total fund, you could remove any revenue account that you'd like at that time. Next step, once your revenue is removed, you're going to remove the appropriation. So that's under Accounting, Maintenance, Appropriation Accounts, and it would be the same thing. So you change the status to Removable, and you're going to select all appropriation accounts you wish to remove. If you're trying to remove an entire fund, you'd select all the appropriation accounts associated with that fund and remove them. Next, you would want to remove the old fund. So to do that, you're going to go under Accounting, Maintenance, and Funds and change the status there to Removable, then select the fund you're looking to remove, and it would be removed at that point. There are examples of links in Payroll that would stop you from removing a fund. That would be when appropriations are linked in a payroll item. That would cause you to not be able to remove it. How would you find this? It could be on an inactive employee, or it could be assigned to an earning, leave, overtime, or withholding that's inactive on an employee. So if you're getting that message, you need to break the link, and you would need to basically change that appropriation account to a different one, or remove the item if it's not needed. So if it's an old employee that you can remove, before you remove an employee, we recommend you keep an employee file separate outside of UAN, and that can track things like any leave balances or start and end dates, things like that. But if you were to remove a whole employee, you'd want that file. If you just need to remove an earning or a withholding or an overtime or a leave that's associated with a fund you're trying to get rid of, again, I'm thinking of the COVID funds. Maybe you were paying things out of the COVID or ARPA funds for different employees. Now they're gone. You probably deactivated that earning or withholding, and it's still hanging out there. You could remove that earning or withholding, and that would break the link in the chain. So remember to break the link in the chain if you have anything in Payroll that is still linked to a fund you're trying to remove. The easiest thing you could do here is run the Employee Information Export Excel file. That's under Payroll, Reports and Statements, Employee Reports. You'd export that to Excel, and that is going to show you your earning accounts or withholding accounts that are associated. And that is where you're going to find the fund that you need to remove, and that will break the link in that chain. So those would be the process. Give us a call if you need any help with that. Payroll links do happen, so especially with the COVID fund, you would need to run that Excel export. It's a quick way to sort it when it's in Excel like that. you find any fund numbers associated with the fund you're trying to remove, and you need to remove the either earning or withholding from that employee. Once that's removed, it breaks the link in the chain and you can fully remove that fund. You could try to remove it first, and if you don't get any error messages, then you don't have any links in payroll. You've been a great crowd today. Appreciate the interaction. To self-report today's training for fiscal integrity, you're going to go again to the Auditor of State's website. You're going to click on training and then the Fiscal Integrity Act, and that's where you're going to self-report today's hours. This is our last question slide. Any questions we don't get to, please email to uan_support@ohioauditor.gov or give us a call. We're coming up on our extended hours in January, so we'll be here to help you through the year-end process. We hope today has been a great help for you, and I'll turn it over to Bob for this section here.
All right, thanks, Alex. I'll say right off, I'm not going to attempt to answer every question here. A number of them are like individual ones or just maybe something too much to get into at the end of the day of a webinar on year-end. It's quite a bit of information that's been thrown at you. So if your question does not get answered, please give UAN support a call at 800-833-8261, and we'll do our best to answer the question or send you to the right agency or division if it's something that we can't answer. All right. Let's see. Do I have to have, most recent one, I guess, is do I have to have 2025 closed before removing old funds? Depends on how old the funds are. If the funds had no activity in 2025 at all, and they weren't tied to any payroll items, like a leave, something that was never discontinued that still has that account code from that fund, for instance, like you mentioned, then you could potentially close that fund, but you would have to first remove the account codes or any other thing that's maybe inactive but had no activity this year. So as long as there's no activity in the fiscal year of 2025, you have to remove them as according to the steps that Alex outlined. So that's that. Let's see. Check a few of these here. A few about unclaimed monies. I'm going to ask you to call in for those. We might just be getting into too much here for this. So a number of questions about temporary mode and purchase orders that I've answered individually, but just to note, really the limit on purchase orders or blankets when you're operating on a temporary, not temporary mode, but I'm sorry, temporary appropriation budget, is a temporary appropriation budget is only supposed to be for expenses limited to the first quarter. So when you open up, when you have that in place and not a permanent budget, your purchase order should only, your appropriation for each account should only be for that first quarter expenses, like I just said. And so the purchase order should be limited by that. But if you, let's say you don't spend as much in the first quarter as you anticipated, and you have a little remaining balance and you don't have an expiration date on that purchase order, then you could continue perhaps to use that purchase order until that balance is spent out, as long as it doesn't, expenses don't continue to incur after the expiration date, if there is one. Otherwise, then you would open up a new PO on using when your permanent budget is in place. All right. Let's see, if I need to carry over a blanket, do I need to change the expiration date? You can't change the expiration date. The only thing you can change on a blanket certificate or a purchase order is you can either close it. Once it's open, once it's posted and open, only thing you can do is reduce it or reduce the balance or close it completely. That's reducing the balance to zero essentially at that point. So no, I think what you're thinking of is So what you may be thinking of is, well, if you have an invoice in that for like a services that were provided in December, the invoice won't show up until January. Well, even if it expires December 31st, if those services were provided in December, and it was encumbered then with PO or BC, then you can make that final payment even though it's past the expiration date. So that's probably what you're getting at there. So you wouldn't have to change the expiration date. Just you wouldn't say, okay, well, I'm going to go out and buy something new in January that I haven't or I'm going to, continue to charge my January electric bill to BC or PO that expired in December. You wouldn't do that. You would have to open that up on the new PO or BC on the New Year's budget. All right. So moving on. Someone said, does the budget of 2025 show the actual amount spent? Well, you can go to the appropriation status under accounting reports and statements, and then appropriation reports. And the first one in that pick list is appropriation status. And it might not show you in the pick list, or in the listing area. You have to actually print it or display it. That shows, that report shows the budget and the expenditures, as long as you print that for the as of December 31st. All right. How many hours can I report for this webinar? For as long as you attended the webinar. It's all self-reporting. So if you were here for the whole thing, you report how long you've been attending this webinar. All right. Okay, the year end may or may not be on the Fiscal Integrity Act portal. You may have to contact Auditor State Training.
Hold on.
Okay, well, we may have some more information on that forthcoming before we close up here. So I'll get back to that. All right, let's see a few other Fiscal Integrity Act training questions. Let's see. All right, so I have a fund that is fully encumbered but not fully paid. So final payment is not going to be made until January. This fund would not be able to be removed until 2027. Is that correct? Because it's going to be paid in January of 26 and paid out in full. That's correct. If you have any activity in 2026, then the fund would not be able to be removed until 2027 when you have no activity. You can deactivate funds or account codes, but you cannot remove them if there's any current fiscal year activity. Okay, I think this question is asking about reporting to, oh, I see. Yeah, actually, I can't answer that question, so I will go into it for everyone.
While Bob's looking over the rest of the questions here, we invite you to come join us for more UAN trainings coming up in the future. Early in the year, 2026, we'll be at the Ohio Township Association Conference. The OTA is going to be February 4th through 6th. We'll also be presenting for the Local Government Officials Conference, LGOC. That's annual every year also. That'll be March 19th through 20th. We thank you for your participation today. And we did have a potential AI theme of UAN possums in space. Now, got shot down this year, but if we have unanimous approval, I think we could make that happen next year. Instead of the wonderful Ohio art barns, it could be the saga of the UAN space possums. So real possibility of seeing that one in the future. And I'll check in with Bob here, see if he's got any more questions. But we are at the end of our presentation. We'll review those questions. Like I said, if we don't get to them, please give us a call on UAN support. Happy to help you, or shoot us an email. I've got it up on screen now. And we thank you for your participation today.